All right, folks. Are you not entertained? Once again, we have to use that quote from The Gladiator. I know it's that movie, The Gladiator, because you guys educated me on that. I still haven't watched the movie, but it's from The Gladiator. 2 times in the past week, because this has been one of the craziest days in the market again. And the reason it's been one of the craziest days in the market, probably a bit crazier than the first couple days after Palantir's earnings, because I mean, that was one stock, which was Palantir, that was running up. This is an entire stock market that I've been staring at for the past 5 hours that has gone up, 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 and up only because of one company, which is Nvda. The entire market was down about 3% yesterday on the perception that Nvda would tank the bed and that there would be no steam left in this rally. Now, not only is Nvda up 16%, it's trying to touch $800. SMCI is at 995. It's trying to touch 1,000 again. The S&P 500 is at 507 to close out the day. We got about 14 minutes until the day closes. And here you go, S&P 507. It's actually 25 cents away from 508. The consensus analyst estimate on the street was 510 by the end of the year. We are at 507. We are basically up 7.3% for the year. And the S&P on average returns 8% over the past 2 decades per year. So, I mean, we've got a year's worth of gains in 7 weeks of trading. It doesn't seem real, but it's happening right now. And we've got a lot to talk about. On top of that, we've got Nubank earnings today. So we got another day of earnings. We've got, what else do we have? We have Meli, Mercado Libre earnings. We've got Square. We're going to be listening to the Square call. I mean, I can listen to Square, Meli, or Nubank. It's up to you guys, but I think Square would be an interesting one to listen to and hear how Jack Dorsey justifies $1.2 billion in stock-based compensation. I think that would be interesting. Also, maybe there's a crypto angle there. And then Carvana as well. So we got a bunch of earnings we got to talk about. We got Nvda to talk about. We got SMCI to talk about. We got Palantir to talk about. Make sure you got a drink. Make sure you got some food. We're going to be here for the next couple hours. Let's get into the market close. Philip, Pishes, Valerio, Dyro, Midwest, Albert, Simon, Crowd Control, Ian, Quarantine, Quartet. Guess you should have bought that share of SMCI. Yeah, I said it. I said, when it got to 690, I asked you guys live on Friday, hey, should we buy the dip? And everyone, unequivocally, 99.9% of you were like, nope, don't do it, Amit. You're going to be degenerate. If you buy the dip, it's not a good idea. I guess all of you were wrong. Now, granted, I wasn't going to buy it, but still, I think all of us were wrong. Now, we'll see where it ends up going over the next couple weeks. But SMCI has taken off. Michael Wilder, Simon, ET FaceTime, Felicia, Kelly, thank you for being here. Blake Anderson, Mark, Alex, Other Zinc, Vlad, are you from Robinhood or no? If you're not from Robinhood, that's okay, but I love your name. We'll include MP Materials. We'll talk about that. World's Got Talent, Brett, Pedro, Altau, Mark. All right, let's get into it. So, I think we'll just start off with Nvda. We'll start off with Nvda. And, you know, in terms of SMCI and Nvda, obviously I'm being jovial here. Oh, you like that word? That's a good fucking word. That's not a bad word. I'm being facetious here. I'm just joshing with you. I'm on a roll today. And I got that vocabulary stepping up. I'm just playing around when it comes to buying Nvda or SMCI, because at the end of the day, these companies, I don't understand how anyone can chase these, even though obviously the chasing is happening, and the chasing seems to be happening on an institutional level. But SMCI is at $993. When it fell to $682, it fell 30% in a day. I mean, I don't think any of us expected it would go up 35% a week later and be basically right back where it was. Remember that guy we showed on Wall Street Bets that lost $70,000? If he had just had expiration dates that were 1 week out and not 1 week before, he would have had all of his money back. But he did the 0-day expirations on Friday, and he lost his money. Yeah, but now it's back. I mean, that guy must be feeling like absolute crap to know that like that was the one, you know, thing that he needed, a different expiration date for that money to come back. But that's what's happened. SMCI 35%. The S&P is up 2%. Now, again, 2% on any stock is whatever. 2% on the S&P, that's 10 points. We were at 497. We're at 507 in the past 5 hours. That like dude, people are barely getting, you know, 5% in money market funds. People are, you know, 2% in a day on the S&P is not normal, and it's also just like not natural, but it's happening because of this one guy, Nvda, up 16% on the day, $782 on Nvda. It is not stopping. It's just not stopping. And it's been pretty incredible to see why this is happening, how this is happening, and sort of where the market is looking like for Nvidia. Now, I want to give you guys a little bit of a different take on Nvidia. I mean, we talked a lot about it. There's a new podcast by Bill Gurley and Brad Gerstner. Brad Gerstner, by the way, has liked a couple of my tweets on Robinhood. So I don't know, maybe he's thinking about Robinhood. But let's listen to them for just a couple seconds or a couple minutes. Talk about Nvidia. They're going to talk about why Sam Altman is trying to raise $7 trillion. And I found this part pretty fascinating in terms of what they're trying to do and how they're trying to explain why the market for generative AI accelerated computing is so big, and ultimately why, if even if you don't Nvidia, this affects you. Because if Nvidia keeps going, if demand keeps building, the stock market's probably going to be okay, barring any super macro political event, which means maybe this rally does have steam left in it.
Starts at 55% and goes down to 26%. That is Nvidia's share of that global compute build out based on current consensus numbers for Nvidia. Okay, so the consensus forecast that has the stock at $700 a share assumes, if you believe this TAM to be accurate, assumes that their share will go from 55% today to 26% in 2028. Now, I think
he's talking about percentage when he says 26%, he's talking about of data center capabilities.
If you just step back and you say, okay, do we think we're going to go from $1 trillion of data centers to $2 trillion of data centers? Just ask that at a high level, okay? Well, you and I just spent an hour plus talking about how 10 billion queries a day are likely to move from information retrieval, right, to inference, as we as humans expect to get answers rather than a card catalog. We talked about enterprises, whether they're...
Real quick, when he says humans expect to get inference rather than a card catalog, what he's talking about there is the difference between ChatGPT and Google. So he's saying instead of answer retrieval, which is this box of like blue links, you're talking about inference. Inference is training a model, whether it's, in whatever use case it may be, and the simplest one is ChatGPT to understand, that is going to give you the information that you want, which is a totally different computational infrastructure to be able to get those answers, and that requires massive amounts of GPUs.
Doing their engineers in code generation, or whether customer service centers, or whether Tesla and full self-driving, or whether it's sovereigns who are taking on national security issues, drone fleets, or whether it's proteins and life sciences or material sciences. There isn't going to be a single industry on the planet that's not employing accelerated compute in order to solve the problems of their enterprise. So if you said to me with that as the backdrop, a year ago, I think the big question, Bill, was, is there going to be enough productivity gains in the world to justify this compute build out? Remember, people thought, oh, we're pulling forward all the demand for NVIDIA. This is like dark fiber in 2000. We're going to be way oversupplied. We're going to have a glut. I think the evidence on the field is that that was wrong. I think the evidence on the field is that, in fact, just like we talked about on the last pod, we tend to underestimate the size of these super cycles, because when you have these phase shifts, everything changes. You have positive reflexivity in the world. More begets more because it's better, right? And so I think the bigger question when I look at this chart and what I push my team on, what I'm certain of, the rumored pricing of H100s to B100s is that B100s are going to cost even more than the H100s. And so I say to my team, like, these margins have to get competed down, right? But the feedback, and something I think that's really important, is that although the B100 is more expensive, it's so much more powerful, right? It's like this. If you had an employee, Bill, and you were paying him $100,000, and I said, hey, you ought to hire this other guy. He costs $200,000. You said, well, why would I hire him if he costs $200,000? I would say he does 10x the work of the guy who you pay $100,000 to. You would pay him $200,000 in a second, right? And I think that's why NVIDIA today is getting those margins. In the future, I expect that there's going to be more competition, whether it comes from this custom chips that you're talking about, whether it's from other competitors.
You guys can finish the pod. I just put it in the description. But the point that he's trying to make there that's incredibly interesting is that data center demand is not going anywhere, and NVIDIA's chips are only getting better and better. Yes, the margins will be compressed over time, but not anytime soon, especially as these hyperscalers are trying to even figure out, that the report came up from the information on Monday, like that Microsoft's trying to reduce their reliance on NVIDIA. Yeah, that's a reduce. That's not get rid of. And even in the process of reducing, it's going to take a lot of infrastructure and computational power to figure out how do we get away from NVIDIA. And so I think that's why we're seeing the market reaction here, which is that, look, the reason they're buying the stock up 16%, the reason no one's selling their damn shares, and the reason if you want to sell a share of Nvidia, you've got someone willing to give you $785 for this share, is because the numbers they reported yesterday basically points to this super cycle, which is a cycle. It will eventually collapse. That will happen. But if it doesn't happen for the next couple of years, then why would you sell your shares right now? S&P's at 508, guys. S&P is up 11 points on the day. We got to get some stats. I don't think that's happened since, I mean, dude, I don't think that's happened for a while. I mean, a day like this, maybe early 2023 or late late 2021, we saw a day like this, but it's probably been a while since we saw 2% on the S&P. And maybe if we saw it at the end of that cycle in December in 2023, it was taken away very quickly, right? But this is a heavy 2% day on the S&P. QQQ Nasdaq 100 is 438, not all-time highs. 439 is all-time highs, but this one is up 3% on the day, up 12 points as well. This was getting to 424 yesterday, so this one also having a phenomenal day. SMCI 983, 34%. Palantir 2360, up 3% on the day. It is just absolutely insane. It is absolutely insane. Okay, so we got to set up two things. Number one, we got to set up our earnings watch list today because we got earnings in 4 minutes. Number two, I have a new idea for what we're going to do on YouTube. So let's see how this plays out. We're gonna think about this over the next couple of weeks. Roth IRA portfolio, 18,571 in cash. All time, this is up 37%. So we were able to get the initial contribution of, I think, 13,500 to get to 18,500. So we're up $5,000, and that's mainly thanks to Robinhood options. I think the Roth is going to become the YouTube portfolio. That's what we're going to do. And I don't know how we're going to decide what to invest in or what we're going to do. I don't know what the philosophy is. I don't know what the investing strategy is. I don't even know what the price targets I want this portfolio to get to. Like initial number in my head, which has no basis in reality, was like, if we can get 18.5 to go to 25 by the end of the year, which is what is that an average gain of? That right there is, I think that's how much? 25 minus 18.5 divided by 18.5. That's a gain of 35%. That's pretty aggressive. That's pretty damn aggressive. If we can get this bad boy up 35%, tax-free, whether it's selling puts, selling covered calls, going long, dividend stocks, I don't know. We got to come up with a strategy together, but I want this to be the YouTube portfolio. I got it up $5,000 to start with. So now, instead of playing with 13.5, we're playing with 18.5. And now let's see what we can do. I have no idea what to invest in this guy. I'm looking at a lot of research, a lot of different companies doing a lot of research, but I want this to be something that's crowdsourced. Maybe make a Google Doc that we can all look at together, that everyone can kind of see the positions. And then kind of see what will that portfolio turn into by December. It's a really unique position, and that's why I want to do this with everybody, because I kind of think the market's a little toppy right now. And I think if the market, has a nice little pullback, we've got 18.5 in cash to go shopping on the YouTube portfolio. And maybe that can get us some good opportunities. Robinhood right now, 13.97. It was struggling for 14 all day. It hit like 14.10 at one point. Right now, 13.97. But we'll see, what we can do with this portfolio and how we can make it to be better over the next coming year, and see what we can do to get it up. PayPal, yeah, we're not putting it in fucking PayPal. That's what we're not doing. We are not doing it in PayPal. We're definitely not YOLOing it in SMCI. We're not doing that. Even though, to be honest, dude, if we just YOLOed 18 grand into SMCI, that shit would probably go up. But we're gonna be responsible. It's the YouTube portfolio. It's your money just as much as it's my money. Okay. So if we have a bad day on that portfolio, that's you guys taking the L, not just me. That is all of us taking the L collectively. That's also why I'm doing this, so that if there's an L on that portfolio, all of us have to deal with that. So you guys have to live with it. All of you. You have to hold your head down that whole day when we're down 10% or 15%, and all of us have to deal with it. All right, Mercado Libre today. What else do we have on the watch list? Nubank. Let me know if I'm missing any. Square. What other earnings do we have? Carvana. And then let me know other tickers. Let me know other tickers that we need to add to this thing. Kyle says, I think we should go Lucid, Rivian, PayPal. That's genius. That's absolutely genius. So how do we get the gains? You guys get the gains by my energy. When the portfolio goes up, I'm going to be energetic. That's going to make you energetic for the day. You're going to be excited for a good stream. And so that's the trade-off there. That's what we're going to do. I get to steal all the crowdsourced due diligence, and then you guys get the energy from the stream. That is the risk reward here. VC, okay. VICI. I think I'm clicking the right one. And then let me know if I'm missing any others. Booking.com. I forgot Booking.com. Booking. All right, folks. It is officially 4 p.m. on one of the craziest days ever in the stock market. The market is now closed. All right, here we go. Where did Nvidia close at? And then we'll get into earnings. We'll pull up all the numbers. S&P right now 507 close. Nvidia, wow, 785, 16.4% on the day. 16.4% on the day. I'm going to run through a bunch of tickers and then we'll get into the earnings ones. TQQQ up 8.65%. Oh, by the way, there was a leveraged Nvidia fund I found out about today. What was the ticker? I'll show it in a second, but that was down pretty aggressively today, and the leverage to the upside was also up aggressively. Rivian down 25%. Intel ends the day down 1%. Shopify down about 0.75. Bitcoin 51,100. QQQ up 2.93. SMCI ends the day up 32%. Palantir ends the day up 3.76%. SoFi ends the day up 0.62%. CleanSpark had a great day, up 10.54%. Palo Alto Networks recovered a little bit, 2% after being down 25%. CrowdStrike also recovering about 6% after being down about 15% because of Palo Alto. Verizon down a little bit today. TTD, yeah, nothing too crazy. I mean, every stock was generally up, and then Nvidia and SMCI were the main ones. Okay, let's go to the earnings for today. This is what we've got. Everything after hours is green. We don't have any numbers yet, but I'm going to pull up the other ones. Is it NVDS? Yeah, I think it's NVDS. Hold on. NVDS. Is this the one? No, this is not the one. This is not. I'm going to pull it up on Twitter. I shared it on Twitter. Let me pull that up. But yeah, I want everyone to think about what are the philosophies we use for the YouTube portfolio. I also want there to be a philosophy, not just like we're picking random stocks, but what is the philosophy? Like, are we selling options in this portfolio? I don't think we should be buying options because it's 2023 and the time to buy options was last year. So are we selling? Are we buying? Like, how are we kind of thinking of this portfolio? Are we doing dividend plays? What is the best way to get this bad boy up to 25K end of year, which would be up about 35%. So NVDL was up 30% today, probably up like 32% now. And NVD was down 30%. NVD is a 2x short NVIDIA daily ETF. NVDL is a 2x long NVIDIA ETF. And so those were the ETFs that were up. Okay, cool. So here are the earnings. I'm building up all the numbers. I don't think we have any numbers yet. It usually takes a couple minutes to get them. Yeah, everything's pretty much flat. Square's up a little bit after hours. Let me get the numbers, or let me at least get set up to get the numbers. And then we'll see. So, okay, we have Square. And let me know which ones I'm missing. Square, Meli. Then we have Nubank. And then we'll get the other ones. Indie Semiconductor. Okay, Indie Semiconductor. Let's pull that one up. I didn't know that company. Another semi play today. Okay. Indie Semiconductor. That one is up 2% after hours. Nothing too crazy yet. Carvana is up 3%. Meli, this is like the Amazon of Latin America. They're growing net income at like some ridiculous rate, like 300% year over year. It's pretty insane. So yeah, that'll be an interesting one to look at as well. What else do we have? Intuit. Oh, we have Intuit today. Intuit. This is Alex Chris's old company. Intuit. Let's do that one as well. Intuit. OCUL up 30%. OCUL. Ocular Therapeutics. They were up 30% today. I don't know if they have earnings, but they were up 30% today. Okay. All right. No numbers yet. Still looking for the numbers. Bookings is down about 3%. Booking stock is $3,901. Really? Am I looking at the right one? BKNG. BKNG stock. Okay. Maybe they should do a split or something. Goodness. Like shit. Okay. All right. I'm looking for the numbers. So Square, nothing's out yet on Square. Nubank, nothing's out there on Nubank. Meli, nothing's out there yet. Let me pull up CNBC as well, in case these guys have numbers. And then I want to talk a little bit more about Nvidia after this, because there were some mind-blowing stats today. Nvidia added $250 billion in market cap. $250 billion in market cap. Intella, are they reporting today as well? NTLA. Okay, we'll put them there. I've heard of this one before. This is a Kathy stock, I think. I think we got Intuit numbers. All right, we got Intuit numbers. We're waiting for the other ones, but I think we got Intuit. Here we go. Here is Intuit. All right. This is Intuit, and then I'll be working on getting Square. Warner Brothers. Okay, WBD. I'll put that as well. Here we go. Here's Intuit.
Mark, the initial move is down about 3-4%, and I'll tell you why. The revenues came in just about in line, 3.39 billion versus that was about what was expected. EPS for fiscal Q2 came in better than expected at $2.63 versus $2.30 expected. The guide is where people might have some trouble. Intuit guiding to a Q3 EPS of $9.34. 34.5 cents at the midpoint versus $9.69 expected. Revenue growth, the guide for revenue growth, 10 to 11% versus 9.7% expected. The full year revenue guide is affirmed. It is in line. EPS guide is $15.89 to $16.10.5. I did have a chance to speak with Sasan Gadars. You'll get more into this in just a bit. But here's what it is, Morgan, when it comes to earnings per share and costs. They're spending on marketing ahead of tax season and TurboTax.
Okay, so I'm still waiting for the rest. Intuit seems to be down. I don't have any other numbers. Brian says, looks like AIPCon 3 is in a few weeks. Can you tell me why? Any info you're seeing? I didn't see any PR from Palantir, so let me know in the chat if there's anything you're looking at. Okay, so Intuit's down 3%. Don't really have the numbers yet, but they're saying it might be due to tax season coming up. But I think they thrive on taxes, so I'm not sure exactly why. We got to get up their numbers. Square's up 1.4%. That's not really anything. Meli's down 6%. Okay, so Mercado Libre might have had some issues. I'm looking at Meli's IR. Meli, let's check them on Twitter as well. Meli sounds like a girl name. Meli. Okay, here we go. So revenue 4.3 billion versus 4.15 on Meli. Gross merchandise volume 13.5 billion versus 12.4. So they beat on GMV. They beat on net revenue. The guidance must be what's hurting them right now. If they're down. Net profit of 165 million. So they are GAAP profitable. Net recurring profit of 383 million. It's got to be the guide. Why are they down? They're down 5%. Or is this just the Q1 2024 vibe where something drops 7% and then it rebounds, or it goes up 7% and then it falls? Like that may be happening as well with Meli. Square's out. Okay, Square's out. Square's out. Square is down. It's red. It's down 1.4. It's down 1.9. It's down 2. It's down 3. It's falling. Down 3.1. Down 3.2. It doesn't look like the numbers are amazing, but again, this is the theme of this year, or at least of this quarter. The initial reactions definitely aren't everything. So Square, still looking. No numbers yet on Square. Carvana's out. How bad is Carvana? Oh boy, Carvana's down 5%. Okay, so Mercado Libre is down 6.9. Square's down 6. Carvana's down 6. Bookings is down 6. And Intuit's down 2. Rocket companies, we'll look at that in a bit. That's up 5. Everything's pretty much down. Square is down 3. So Square's recovering a little bit. I'm trying to get the Square numbers. That's the call I think we should listen to. That'll be an interesting one. Where are these numbers? Let me check CNBC because I don't have it here. Let's see if they have it. Let's see. No, Square doesn't. CNBC doesn't have it yet. On their website, they have not updated. Nope, they haven't updated. Let me go to press releases. It's not in quarterly reports. Investor news. Oh, I got it. We got it. All right, here we go. We got the full numbers. We got the full numbers on Square. We got the full numbers on Square. I think we do. Investor relations, Square, shareholder letter. No, fuck. This is Q3, dude. This is Q3. So many of these companies have been doing this. They say, hey, we have the results. Then you click on the PR. Then it takes you to another link. And then the other link isn't working. It is really, really weird. Square is down 3.4%. Nubank. Oh, I forgot about Nubank. I totally forgot about Nubank. Nubank's down 11%. Oh my gosh. Okay, let me try to get Nubank as well. I completely forgot about Nubank. Nubank's up like 40% since the low 7s back in October. Nubank is just growing like dramatically in Latin America. Q4 revenue, Nubank 2.4 billion. 2.4 billion, okay? That's all I have so far. 2.4 billion. Damn, someone says they just bought calls on Nubank. Oh boy. I hope you have some time for them to expire. Nubank 2.4. Dude, if someone made a website that just consolidated earnings as soon as they came out, I would pay like $20 a month for that. Like that would just be, this is ridiculous. Like this 2023, we should have, I know it's a Bloomberg terminal, I get it, but like 25,000 a month or 25,000 a year is a little too much for that. If someone has the link, put it in the chat. Square is still not up. Square numbers in the latest, Square is still not out, at least not publicly. And then Nubank 2.4 billion, which it seems like that was not the best, which is why people are mad. Square doesn't post till 415 to 420. Okay, so then this move right now doesn't even matter if it's down 3%. Then it doesn't even matter. Okay, I think all right. We have some numbers. Here we go. We have some numbers on CNBC. We have Live Nation. Okay, so while we're waiting for everything else, we'll look at Live Nation. This is a company that sells tickets. We'll pull them up. I didn't even know they were performing. Here's Live Nation. Then we'll go to Square.
Million versus the 118.7 million. That was the street account estimate. And Concerts posted a bigger than expected operating loss of 184 million versus the 167 million that was estimated. And that may be what is weighing on shares right now, because the company did share a strong outlook with ticket sales in the first month and a half of this year up 6%.
Carvana. Okay, so we'll go back to that. Carvana. Why is Carvana doing so well? Where's Carvana? Oh my God, it's up 20%. Wasn't this, correct me if I'm wrong, guys, wasn't this the one that was like the thing that was shorted a ton and there was like a squeeze on it? Am I wrong on that? There was like a massive squeeze, I feel like, on this one, and then it turned into like a legitimate stock because the squeeze was stupid. Like, short interest is 35% on Carvana. So any good results is what's getting Carvana attention. Short interest is 35% on CVNAs. Stock's up 15% right now. 15%. I don't have the earnings for Carvana. I don't have them yet. They are not out. Square also is probably going to take a couple minutes. Carvana is acting like a semiconductor stock right now, dude. Okay, so Nubank net profit of 360 million, 2.4 billion. And it seems, and they're down 11%. So the street is upset about something. Or now Nubank is down 5%. Meli's down 8%. Square is up 3%. Square is up. Square is up. Square is up 4% now. Square is up 6%. Square is up 6%. Okay, I'm trying to get Square numbers. Square should be out. Square should be out. Square should be out. Square is up. Wow. Square's okay. So Square, here we go. Q4 EPS. 55 cents versus 59. They missed on EPS. Revenue. Wait, they missed on revenue too. What was the beat? What was the beat? They missed on revenue and EPS. Why is Square? Square's up 8%. What the hell did they do? What are they buying back their stock or something? What's going on here? Yeah, look at this. So, revenue. Oh, no. This is the wrong numbers. Or I think that person had the wrong numbers. So net revenue 5.7 billion versus 5.75. That's a beat on revenue. So they did beat on revenue. Adjusted EBITDA 562 versus 447. That's great. Adjusted EBITDA for 2024 2.6 billion versus 2.4. Oh, right there. That's a good beat. And then gross payment volume 57.49 versus 58.58. That's a small miss. Adjusted EPS 45 cents versus 59 cents. It looks like that guidance has got them up. Yep. They're up 7.5%. There you go. That'll do it. 187 million in net income. So they're Philip, is that good year over year in regards to their numbers? 10%. Wow. Jack Dorsey is doing his thing. Rocket, that thing's up 6%. I'll pull that up in a second. Rocket companies, Nubank's now recovering a little bit, down 3.4%. Mercado Libre is down 10%. Square is up almost 12%. Carvana is up 14% right now. We are seeing some momentum there. I think we'll get some. All right, we got Square numbers. We got Square. Here we go. Let's pull this up. Here we go. Square is out. Oh, Philip says they were not supposed to be profitable. Okay, so if they made a profit, yeah, that'll shoot the stock up.
For Block, formerly Square. We're not going to compare the earnings number, but there does appear to be a pretty big impairment charge that's weighing on that EPS number. Revenue, though, was stronger than expected, 5.77 billion. That was boosted by Bitcoin revenue, which came in at $2.5 billion. Bitcoin gross profit, meanwhile, which is how the company measures it, was up 90%. Adjusted EPS, 46 cents. I did speak to the Block CFO, Nvda Ahuja. She told me this was due to a write-down on their investment in Tidal. That is Jay-Z's music streaming company that Square acquired back in 2021. It was
Okay, if you've been listening to me on this channel for a while, you know why they just said that they wrote down their Jay-Z Tidal investment. You've got to understand why that's just hilarious if you've been listening to this channel. This is a guy who gave Jay-Z $300 million basically to become best friends with him at the expense of shareholder capital, and I've critiqued it, profusely. But all right, so they got rid of that. At least that's in the past now, and now they're on to profitability.
It was a $132 million impairment charge. Nvda Ahuja is saying, quote, "It reflects our latest thinking about the landscape in the broader streaming industry, which informs the current value of assets." She does say that does not change the long-term vision for what they think they can build with Tidal, but a quarterly impairment there. Adjusted EBITDA guidance stronger than expected. Square is raising its full-year profit guidance. CFO telling me that was thanks to a lot of cost cutting that we've seen. As she put it, as we head into next year, a lot of the discipline around operating expenses will continue, which Wall Street wants to see. Also, a quote in here from the founder and CEO, Jack Dorsey, about focusing more on U.S. markets and monetizing existing customers when it comes to Cash App. So that does mark a little bit of a strategic change. Strong quarter for Cash App, $3.9 billion in revenue there, up 31% year over year. That's really been a growth engine for them. Subscription and service revenue, services-based revenue, up 36%, and then strong growth in buy now, pay later. Guys, you can see shares up more than 13% here, likely due to some of that cost cutting and optimization and the higher guidance there. Back over to you.
Yeah, quite a move. Getting back toward those highs. Kate, thanks. Carvana earnings are out. Phil LeBeau has those numbers. Phil.
John, this is a miss on the top and the bottom line, with the company losing $1 per share in the fourth quarter. The estimate was for a loss of 89 cents a share. Revenue coming in lighter than expected at $2.42 billion. The street expecting revenue of $2.52 billion. So you might be saying to yourself, wait a second, why is the stock up more than 12% if they missed on the top and the bottom line? The guidance, while it's not super specific here, it is relatively optimistic, both in terms of the first quarter and full year. In the first quarter, they expect the units sold to be up slightly year over year compared to the first quarter of last year. And for the
Carvana's up 20% right now.
Full year, they do expect to grow the number of retail units that are sold, as well as increase the adjusted earnings this year. But again, not specific in terms of how much. So again, Carvana, despite missing on the top and the bottom line, up now almost 12%. Guys, back to you.
All right, Phil, thanks. Up next, we're breaking down.
Okay, so we've got a lot to cover here. These companies, they just don't release their earnings on their websites. I'm trying to get the actual numbers, even though we have the basic numbers, but I want to see the actual presentation. So we're trying to get that. So Mercado Libre, apparently, they beat on EPS, they beat on revenue, but they're down 9%. I don't know what they said to the street to get them upset, but it definitely wasn't something exciting. Has probably something to do with guidance or their net income. Square, just phenomenal numbers. Where's Square right now? Square is up 12%. Let me just share the screen. Square has absolutely killed their earnings. They beat on profits, and it looks like they beat on adjusted EBITDA margins for Square. This is a company that I did not like for a long time, quite frankly. I still don't like them. I don't really understand the company. But it's going to be fun to listen to them on the call today. Kelly says, remember that time I was buying Square at 43 and you were mad? I wasn't mad. I was just like, I don't know why you're buying this thing. This guy's giving Jay-Z $300 million just for fun. But they wrote off that $300 million and now they're moving on. You know, the other reason why Square is probably doing good is obviously Bitcoin, right? They do have some percentage of their revenue come from Bitcoin. And Bitcoin price goes up. Their transaction fees, I believe, if that's their business model, percentage of the fees, percentage of the price, that goes up. And so that's probably helping as well. What happened to Booking? Okay, so Booking is down 4% and Rocket Company is up 2%. I'm trying to get RKT's numbers first, and then hopefully we can get into the actual reports by these guys. Okay, so RKT, this is RKT numbers. Rocket Company, I don't know what this company does, but they did put out earnings today. They're up. Net revenue of $694 million, adjusted revenue of $885. GAAP net loss of $233 million. Reported full year 2023 net revenue of $3.8 billion on Rocket Companies. Rocket Company. Oh, this is a financial service company. Oh shit! I thought this was like a space company. I was like, oh, these are pretty big numbers for like going to space. Okay, so Rocket, let me know if you own that in the chat. I don't own that one, but that one's a financial services one, and that's doing well. Cars 84 says that I had puts on Rocket. Okay. Meli is coming back a little bit. It was down 10%. Now it's down 5%. Square is up almost 13%. So the street really, really liked Square's earnings. Intella, that one's barely up. That's flat. Indie Semiconductor, that one's flat. Intuit's down 2%. That one's not that crazy. And then Bookings is down 4%. Gonna try to get that one. P-Stash, thank you for the super chat. He says Meli's down because of the one-time tax bill that caused profit to miss by 4 million. Would have been by 30 million without taxes. That's very similar to Robinhood in Q3. They had a little regulation bill, or otherwise they would have been profitable. Maybe that's why they initially were down, but the street's finally absorbing that a little bit more. Rocket Mortgage. Oh, I know Rocket Mortgage. I know that company now. That's the company. If you said Rocket Mortgage, I would have immediately, okay, interesting. So Rocket Mortgage up 5.56%, market cap of 21.7 billion, 52-week low of $7. Right now, the stock's at $12, up almost 35% from the lows. Mercado Libre down 5%, Nubank down 4%. All right, I'm trying to get Nubank's numbers on their website. We're going to be listening to Square in a little bit, and we'll see what these guys have to say. I mean, these guys are the star of today's earnings. Okay, so here's Nubank. Okay, perfect. We got Nubank. This one's exciting. Their growth is incredible. Nubank's growth is absolutely incredible. So let's check on these guys. And real quick before we read these, Nvda after hours, Nubank's down 5%. Nvda, it is up after hours. It's still up 0.08%. So Nvidia 785 right now after hours. Nvidia holding strong. Okay, so customer growth. 4.8 million customers in Q4, 19 million year over year. They have 93.9 million customers globally, primarily in Latin America, is Nubank. Wow. They had 54 million 2 years ago. That's incredible growth. 87 million in Brazil. So 87 out of the 93.9 million are in Brazil. They have 53% of Brazil's adult population using Nubank. Buffett also, I think, has a stake in this company as well. Monthly average revenue per customer grew to $10.06 in Q4 2023, which is 23% year over year. Mature cohorts are already at $27. They are continuing to drive engagement. Revenues are up. Popularity among the customer base. The banking relationship for over 61% of monthly active users, and active rate grew to an all-time high of 83.1%. Monthly average cost to serve per customer remained virtually unchanged, so their costs are flat, and their average revenue per user is up 23%. That's incredible. Asset quality in Brazil's News 50 to N NPL ratio decreased slightly to 4.1% in line with expectations. That's totally normal. Net and adjusted income, I think they're profitable. Yeah, 360 million in profits compared to 58 million last year. That means they're up on profits almost 500%. 500% they're up on profits year over year. That's incredible. Revenue 2.4 billion, another record high. That's 57% year over year. Dude, you're not going to find a lot of companies growing net income 500% and top line revenue 57%. That is not easy to do, especially not in Brazil or Latin America, like where the disposable income is not as high as it is in North America. That is absolutely incredible, dude. That's crazy. Why are they down? Why are they down? Like, what did they say? What has got the street upset? They're down 6%. Now the market cap on Nubank is 50 billion. So a lot of people don't like the valuation, but the growth and the PEG ratios kind of make it cheap. I mean, like when you're growing 57% top line, you can kind of justify that valuation. It was at 30 billion a couple months ago. So let's see. Where's the guidance for Q1? I don't think they have guidance for next year, or it doesn't look like they have guidance. It doesn't look like they gave guidance. Or if they did, that's why the street may be upset. But I don't understand why the street's mad. These are good numbers. These are not horrible numbers. We'll look at Intuit CEO in a little bit. He's talking right now. But let me go back to the charts and then we'll keep going. Okay, so on today's earnings, we have Mercado still down 8%, Nubank down 7% now, Square's up 11.3%, Carvana's up 14.39%. Let me pull up Carvana's numbers. I should be able to get their numbers now. It's time. Carvana. So Carvana is a company that sells cars. And they sell cars. That's their thing, from my understanding. Okay, here we go. Fourth quarter. I got their numbers. All right, Carvana's up 14% for a reason. Square earnings are out. Yeah, no, we did Square. The call doesn't start till 5 though, right? On Square. Let me just make sure. The call doesn't start until 5, right? It should be at 5. If it's at 4:30, well, yeah, it should be at 5. Okay, yeah, it's not here yet. Okay, so here's Carvana. They sell used cars. Okay, Pouncer's down 2% after hours. Okay, we'll go to that in a second. Net income 150 million. They're profitable. Record total gross profit per unit, $5,000. That's up almost 100% year over year. Net income under 50 million. They sold 76,000 rental units for a total revenue of 2.4 billion. So the used car market is what Carvana is after. They sold 312,000 units in 2023 for 10.7 billion in revenue, and it looks like net income is going to be close to 500 million for the year. Outlook. They say while the macroeconomic and industry environment continues to be uncertain, looking towards the first quarter of 2024, Carvana expects the following as long as the environment remains stable. Retail units sold slightly up year over year, adjusted EBITDA significantly above 100 million. This outlook is driven by results so far in Q1. Okay, so that's not actual revenue numbers. This is a very simple press release. This is nothing fancy at all. This is just like, all right, here's our numbers and do what you want with it. Now, these guys are sold 35% short. These guys are 35% short. So there is definitely a population out there that could be squeezing these guys if there's enough buy-side pressure. 12% right now for Carvana. It was up 20%. Now it's at 12%. Square's up 10%. Nubank's down 5%. Mercado is down 7%. Let me get Mercado's numbers and let's listen to Intuit's CEO and see what he had to say about their quarter.
So should I read marketing spend into that? Because I mean, TurboTax and making sure with all the uncertainties that people are funneled toward that product, which is having a very important quarter. Is that some of where that spend is going?
That is for sure an element of it, because at the end of the day, we manage margins and expenses at the company level. We're always making puts and takes to make sure that we're not only investing for today, but investing for tomorrow. And again, because Q3 is such a big quarter for us, we ensure that we have the program dollars and the marketing dollars for the quarter, along with some other puts and takes. So that's the way you should think about it. But the net is, we feel very good about the year. We feel very good about the quarter and just putting our investments to use.
I also asked about small businesses, such a huge part of Intuit's customer base. Sasan told me post-pandemic, they're turning more to AI-enabled software.
What you see in our numbers is a reflection of a wave of digitization by small businesses, not the strength of the economy. In fact, when I spend time with small businesses, the biggest thing that they are focused on right now is how do I ensure I'm organized? How do I get paid faster? How do I get access to capital? How do I make sure I'm more effective with my marketing campaigns to retain customers and get more customers? And a lot of those capabilities is what we provide on our platform. It's all in one place. And based on all the data that I know about you and our AI capabilities, we're able to.
Of course, he's talking AI, dude. Of course, I don't know if AI is going to take Intuit to the moon, but of course he's talking about it. All right, guys. So here's Mercado's results. I can't really get it because there is an error. There has been a critical error on this website. I don't get it, dude. Why? Like, these companies are public. They have to show their numbers. It feels like every time they're trying to hide their numbers or there's something going on. Like, how are you a what is it? What is this? And Mercado's, what's their market cap? $91 billion company, and you can't get your website to work? Like, you can't handle a little bit of traffic on earnings day? Like, it's insane, dude. There's got to be a better way to get these results easier. This is ridiculous. I'm trying to get Nubank. A market beat, by the way, there's no subscription. You can just type in any stock in there and they'll show you the short report or the short float. So you don't really have to pay for it. Well, no, we just went through Nubank. We just went through Nubank summary. We did that. Nubank did phenomenal. I don't know why they're down at all, but Nubank is down. Look, I'm here. I'm on the website. I say, okay, check out our earnings results. And then it says, sorry, we can't show you the earnings results. I'm like, all right. I mean, like, I don't know. Maybe I can't invest in your company then if we can't see the results. Just get Bloomberg Terminal, dude. We're going to work up to it. That's why we got to get the Roth from 18,000 to 25,000, because then we're just going to buy the Bloomberg Terminal. And then we got to make 25,000 again somehow, because we got to pay for that shit every single year. So we're going to figure it out. Square, 11.2%. Carvana, 12.7%. Rocket Companies, 5.83%. Live Nation down a little bit. That one's basically unchanged. Mercado's down 10%. I'm trying to figure out why. They beat on EPS. They beat on revenue. It's got to be something in the guidance. Let me check on Twitter if there's anything there. Q4 ER net revenues are up 41% year over year. 4.3 billion. Income from operations 240 million. They made a profit. There might be a goodwill impairment charge. That's what's messing up their EPS. But that's not, I don't know if that's enough for the street to get that upset. Oh, here we go. I got some numbers. Someone got the deck. Someone got the deck. Hellybird says, I just joined. I took profits on Microsoft today. 12,000 gain, sold at 410. Is this a mistake? Maybe, but I think we have a correction coming. That's, it's such a good question because I think everyone's going through that scenario right now. A bunch of people today told me they sold their Nvda, and they had like $200-$300 averages. Dude, maybe it's a mistake if Microsoft keeps going to the moon, but I cannot imagine Microsoft hits 430, 440, 450 after it went from 310 to 410 in the past year. Like, I don't know, man. I really don't know. I think that's a good sell. Now, based on your average, I don't know if you're going to get back in at a decent average, but if you wanted to take profits, I don't know if Microsoft's going to rip to the moon and you're going to be upset that you sold this early because I don't know. It's just we're at a all-time high in the markets, and maybe this stops, but maybe Nvidia keeps it going. So here's some of the highlights from their deck. You can't really see things that well, but they have some things that are happening here. The person said Latin America e-commerce giant Mercado Libre on Thursday reported 165 million fourth quarter net profit. Higher sales were offset by a tax hit. Okay, net profit was dented by 1 to 2 off-tax provisions. That's okay. The street shouldn't care about that. Mercado posted a 42% year-over-year increase in quarterly revenues. That's incredible, dude. Again, Mercado Libre is like the Amazon of Latin America. Analysts had expected net revenues of 4.12 billion. They brought in 4.26 billion. Income from operations, excluding one-offs, to 572 million. Again, these are not bad numbers. These are relatively basic numbers. It's just that those taxes, I think, might be bringing them down. The firm said its quarterly operating margin with one-off stood at 13.4% compared with 18.2%. That might be the reason. They're down 5% on operating margins, which is not good for a company that's already, And Mercado Libre doesn't have an AWS. So they're like from my understanding, an actual like retail e-commerce business. Like they need to make margins on the water bottles that they sell. They can't just, say that, our like data centers are going to be able to deal with this. Seasonally, we have always had margin compression in the fourth quarter. Chavez said Black Friday and Brazil and Buen Fin in Mexico was leading to more of that margin compression. Okay, so those are the updates on Mercado Libre. Mercado Libre. Stock right now is still down 8%. Nubank down 5%. Look at Square. Square is being a champ today. Look at that. Remember when Hindenburg shorted Square at basically this price? And it really didn't fall until like 5 months after their short report came out. But the whole market took a hit, so it wasn't really them. They're right back to that same price. They were at 77 right when Hindenburg wanted to short them back in, this is like March of 2023, something like that. They're right back to those levels. Meli's fintech and credit are big drivers. Yeah. See, this is why I got to do more research on Meli, because I understand them purely as kind of an e-commerce play. And I know there's a lot of other divisions to them, but they don't have an AWS. They don't have like something that subsidizes the entire business and allows it to be a loss leader. But I would imagine they have other aspects to them because they are a fintech that give them the fluidity to not have to, make the best margins in the world on selling, like water bottles or whatever they sell in the stores. I am not in Microsoft, but I'm keeping my 200 shares, $500 coming this year. You think 500 is coming on Microsoft this year? Oh boy, man. Where's Nvidia? Let's get some more coverage on Nvidia while we're waiting for Square. So we went through all the earnings. Let's pull up a little bit of coverage on Nvidia because again, today was absolutely crazy. Also, while we're talking about this in the chat, Jim Cramer today said that Jensen Huang was more visionary than Elon Musk. So let me know how you feel in the chat based on that. That definitely got some people talking. That Jensen Huang is just, his argument was he's redefining an entire paradigmatic shift when it comes to AI and computation, generative AI, accelerated computing. Elon Musk is just making cars that'll like drive ourselves. I mean, that was his take. So let me know what you guys think in the chat on that one. Okay, so here's some more coverage on Nvidia, and let's keep going from there. All right, here we go. And then we got Square in about 20 minutes.
Isn't it, Bryn, as Stacey Rascon, as Josh just said, quote, The story, this is what he says today. The story still feels like it has legs. We markedly increase estimates again and take our price target to $1,000. He was at 700, which we asked him about yesterday. He said, don't pay too much attention to my target there, but he bumps it to 1,000.
Yeah, I mean, what's so incredible is if you think about it, if you take a Google, Apple, Meta, Microsoft, and Amazon, what, $12 trillion market cap, when all of these companies get together behind the same theme, which is AI, Nvidia is the recipient of all of that, the majority of that CapEx. And so this call, if you haven't listened to the call as an investor, I implore you to go listen to the call. It was like a masterclass. And this is so exciting because I've just never seen a company that in 2021, they had revenues of like just shy of 17 billion. For 2024, they're going to do 60 billion. I just don't know of a company this size that have had just this catapult. And so investors need to remember the revenues and earnings are growing really in lockstep with the price. And so I think they're hitting on all cylinders. I will say, Scott, though, if you think about it a year from now, I don't think you're going to continue to see 200% growth year over year because you're going to see that stabilize, but you're still even looking out even further out. This company is probably going to be growing at 15 to 16% a year. So they just continue to be in pole position while everyone else is just trying to ride their wave.
You were calm, cool, collected yesterday going into the number two. I asked you straight up if you were nervous. You said no.
Guys, we just got Reddit's IPO filing. I'm pulling that up. We just got, that's going to be juicy to go through. Let me get that up, but we'll keep watching this. But I think Reddit's S1 just came out, and we're going to get some details about this company.
Because you believe in the company, you believe in the stock. They obviously delivered. Jim Lebenthal, I'll go to you next because you also own it. Reasonably new position for you. You were looking for this thing to trade lower so that maybe you could buy more. You're not going to get that chance, or maybe you had it and didn't buy enough.
Yeah, no, I don't think it's going lower from here. But I also think the major point that I would make is that you do have to own this. Now, I know it's a controversial statement. There are some on the desk and others who are not on the desk who would say there's no stock you ever have to own. But look, clearly all the oxygen in the room, and by that I mean the cash flows in the market, are going to Nvidia. And fundamentally, there are strong reasons, which Josh and Bryn just pointed out, for that to continue. I said last week, Scott, and you'll remember, I said, listen, you got to own this at 1%. That's a small enough position that on any dips you can add to it. I'm saying that again today. If you don't own it, I do recommend that you add a 1% position to it.
When you look at this compared to your other holdings, so this company, 21% operating margins last year. This year, 62%.
Yeah.
This is unheard of.
I mean,
here's my question. So you look at that and you say, maybe 1% is not correct.
Maybe it should be more.
Well, we all own like some expo. We have these companies that are earning maybe like 2% profit margin, trying to scratch nuggets of copper out of the ground.
I'll dance with you. I mean, look, the reason I'm saying 1% is, let's face it, it's up 15% today. And, we can go through the superlatives of its price return year to date, the last 2 years, whatever you want. I mean, the 1%.
It was 660. I'll go back. Yeah. It was 666 yesterday.
Right.
Ahead of the number. I was like, oh, man, that's an ominous number to go into a print on. And now it was 777.
And
so it was up 100.
I'll just close on this from a fundamental point of view, and I know it sometimes drives you crazy when I do this or when Stephanie does this, but you look at the valuation, you're going to say, as Stacey Raskin just said, it's not expensive. I mean, the earnings estimates are going to go up after this, and it's probably below 30 times forward earnings. You got a growth rate of above 50%. The PEG ratio, price to earnings to growth ratio, folks, is below 1 for a company that is just absolutely knocking the cover off the ball, and the cover and the ball are out of the park.
Yeah. So, Steph, you don't know.
Oh boy. I mean, again, you hear stuff like that and you're like, well, maybe I do need 1% Nvidia, but then you look at the market and you look at the S&P 500 at an all-time high, at the analyst estimates that they said in the end of 2024, we would get to those levels, and we're already there. And it really makes you wonder, is this sustainable? Here's a quick update on Reddit. Here's their IPO filing. We're going to look at the IPO filing in a second, but I wanted to see what the valuation was because I don't think I can find the valuation on this document. But I think CNBC might have the valuation, and then we'll look at the actual numbers. We've never gotten Reddit's real numbers before, so today we're going to get to see the numbers, given they are going public.
Reddit has filed its S1 with the SEC. The company saying it intends to have its shares listed on the New York Stock Exchange under the symbol RDDT. The company's net income for the 3 months ended December 31st was $18.5 million. Company says its revenues for those 3 months were about $250 million, announcing 73 million daily active unique users, 267.5 million weekly active unique users, and saying that Morgan Stanley, Goldman Sachs, JP Morgan, B of A, Citigroup are among its underwriters. So they do say they do not anticipate paying any cash dividends in the foreseeable future. We're going to continue to dig through this.
Okay, so she didn't give the valuation. I thought she would give the valuation. So here's what we got on the S1 for Reddit. 73 million people use this thing every day. 100,000 active communities. 267 million people use it every week. Let me know in the chat if you're an active Reddit user, meaning you actually go to it every single day. And 1 billion cumulative posts. I don't know if that's all time or if that's posted every day. I feel like that's all time. Their pitch, by the way, an S1, when you go public, is basically like you're telling the market, this is like the document that the market really has to observe to try to understand what the investment thesis is. WeWork did this in 2019, and they had some really fancy accounting, and the market was like, yeah, you guys are not going public. So this document really has to be intact and share, why people should buy your shares. And that's what they've just submitted today. 100,000 active communities. I want to get some more numbers here. In December 2023, more than 500 million visitors, and in the 3 months ended December 31st, 2023, on average of 73 million active uniques came together in the world on Reddit. They want to grow awareness of Reddit, grow engagement, improve discovery. I'm trying to figure out how much money are these guys trying to raise? What is the valuation? Like, what are they trying to, is this going to still be at, oh, shoot. Are they trying to do 25 billion? No. That's after the shares vest. There's no way that's 25 billion going public. I wish they had that in the top. We could immediately see that. Here's their statement of cash flows. As you guys can see this. I use Reddit every day at lunch. Everyone says they use Reddit. So in 2023, they did 804 million. In 2022, they did 666 million. Are they profitable? Net income? Okay, so they lost 90 million last year. They lost 158 million the year before. So they're not profitable, but they're not horribly unprofitable based on the rate of decreasing their overall losses. Free cash flow, they're not free cash. No, they are free cash flow. The 84 million, so they're not free cash flow positive either. Interesting, dude. There's a lot to get into this one. I think Wall Street Bets is absolutely going to tear this up. I agree. Wall Street Bets is absolutely going to tear this one up. Total DAQ, daily active user, year-over-year growth, Q4 2023. So gray is logged in, red is logged out. Or no, so gray is logged out, red is logged in. What does that even mean? I guess that means if someone was actually browsing, but they were just like they didn't have the account open, which, yeah, that's reasonable, I guess. Is that reasonable, dude? Has any company counted a logged out user as a user? No, that's not a thing. That's not a thing, dude. What company counts a logged out user as a user? You don't even know if they're a user. Like, they're logged out. They're not logged in. How do you account for them using it? I mean, yeah, you can see the web traffic, but how is that a definitive user? I mean, it is a definitive user technically because they're using it, but I've never heard, like, Instagram doesn't say, oh, these people went to Instagram. No, they force you to log in to use Instagram. That's kind of weird already. That's a little weird. That's weird. Maybe I'm wrong on that, but that's a little weird. United States is about 40 million of their users, and rest of the world is another 40 million, roundabout. DAU growth in the United States is 34% year over year, 21% rest of the world. Global DAU is up 11% year over year. Okay, well, Reddit. That is Reddit. Reddit is now trying to go public. That's what we got on Reddit. We got Dan Dolev talking about Square on CNBC. Let's get his thoughts as a fintech analyst. Here we go. Let's hear what he has to say.
Just want to give you some props there. What was the biggest upside surprise here in this? Last time we checked, I think it was up like 13%. I don't know if that's holding.
Yeah, I think with the market, it's a great quarter. I know there's been some misses and some beats, but what I want to focus on is a couple of things. The monetization rate sequentially up 5 basis points. That's huge. So it's how much they can get charge people on the Cash App as a percent of volumes. It's at 148 versus 143 before. Inflows are really strong sequentially up. So people are flowing more money into the Cash App, and they're guiding EBITDA higher than the high number that they guided before. So kind of checking, all the marks here, it looks really good.
5-10 years ago, Venmo was the thing that young people were, using for digital money. Cash App has sort of taken over. Why is Cash App a better model than Venmo? Because I know you don't like PayPal, which owns Venmo, and the idea is that there's very little business structure around Venmo. Why is Cash App different?
I think there's more focus, and it's more viral, and it's kind of sexier, right? So they've turned it. Jack Dorsey turned it into a really sexy product. There's music that bears a Cash App name, et cetera. So people like it, and it sort of naturally grows. You don't need to advertise, and that's what makes it so great.
I mean, the company is raising full year profit guidance. We know there's been a lot of cost cutting at this company, and it sounds like, based on the CFO comments that were given to Kate Rooney, that financial discipline is set to continue. How much can this company, I guess, continue to pull these levers to realize greater profitability in this environment?
There's a ton more. So if you go back to their 2017 Analyst Day, they could do like 40, 45, 50% adjusted EBITDA margin. So way higher than what they're forecasting right now. So the machine has the opportunity to generate really, really high margins once you get the scale.
Bitcoin. We're going to talk about it. Jack Dorsey, sort of one of the fathers or proselytizers of the cryptocurrency. It's in the results again here. How to think about that, where this company is concerned, especially as things like profitability start to take on greater significance.
Yeah, it's a great story, but it used to be very correlated with Bitcoin, and it sort of lost that correlation if we go back to like 2018, 2019. So for anyone that's kind of bullish on Coinbase, because of the Bitcoin correlation, look at what happened to Square. So it's a great story, but it doesn't drive the story anymore. So what drives it is profitability, inflows, all the products in the Cash App, as you mentioned. Those are the things that make Square so great.
What about Afterpay? I'm reading some places that downloads have slowed down faster than other buy now, pay later offerings. So is there trouble there in their being able to build a customer base and the right kind of volume and data knowledge that they'll need for that to be successful?
Yeah, undoubtedly. It's, I would say, a weaker link here in this whole story. It's not the best part of the story, and I still have to dig through the numbers, but you're seeing companies like Affirm, which I like a lot. Like the execution gap has gotten really wide, but it's okay to be not the number one in a great secular story.
All right, Dan Dolev, thanks for joining us.
Thank you.
It's time now.
Okay, so Dan's bullish on Square. I wish they asked him about Coinbase, dude. We can get to hear his thoughts about Coinbase because he has a $60 price target on those guys, and they went up pretty aggressively after earnings. I mean, Coinbase came down. Where's Coinbase today? We got 12 minutes, folks, till the Square call starts. Coinbase today, 170. They were up 5%, and then Bitcoin was up. Where was Bitcoin? I think it was at 51. Ethereum was at 3,000. Now it's at 2,977. Bitcoin 5157 on Bitcoin. Nvidia is still, wow. Nvidia 790 after hours. Holy crap, dude. This thing's going for 800. Josh says, I never heard Meek Mill rap about Venmoing someone. Oh my gosh. Dude, this thing's going for 800. It's going for 800. That dip at 674 was so juicy in hindsight, but so scary in the moment. Robinhood, 1396. They're down a little bit after hours. Now, here's the question, folks. This is the question. Here, let's do this question tomorrow. Let's do the question on the poll. Let's see what you guys think. Here's my question to everybody. Does this sell off tomorrow, or does this keep going? Does this sell off tomorrow, or does this keep going? Start poll. Nvidia sell off tomorrow. Yes or no? What do you think? Does it actually maintain itself, or do we get a sell off? I kind of think we keep going, dude. I kind of think the show keeps going on. Palantir down about 1% after hours. Nvidia up 60. Basically, Nvidia's up 17%, 17.3%. Dude, their market cap went from 1.67 trillion to 1.94. which the exact math on that is 1.94 minus 1.67, 270 billion. 270 billion in a day. They added a Netflix in a day. They added a Disney in a day. I mean, that is just, I don't think the market cares anymore. And as a result of that, the S&P says, you know what? I would bet the S&P is up after hours, or the S&P is flat after hours. 507 on the S&P. They're like, let's keep it going. SMH, the semis ETF, that one should be up heavily today. That one's up freaking 7%, dude. It's an ETF. ETFs don't go up 7% in a day. They're not supposed to do that. They're supposed to go up 7% in a year. It's not even a leveraged ETF. It's just the semis ETF. Meet Kevin's PP should be up. Yeah, that's up 3%. He owns a ton of Nvidia. Enphase is wearing him down there, but he owns a ton of Nvidia. Ross Gerber's ETF should be up. GK, he owns Nvidia. That's up 3%, 3.6. Look at that. Gerber's ETF has not done well over the past 2 years, but he has enough Nvidia to get that sucker to outperform. I mean, man, dude, if you had an ETF, literally all you had to do is buy some Nvidia at 400 and you're beating everybody. That's it. You didn't even have to buy it at 200-300. You could have bought it at 500 and you're beating everybody. That's it. That's all you had to do. Oh my gosh, that is incredible. That is absolutely incredible. We got the call in 9 minutes on Square. TQQ is up 180% in the last year. This is the triple leverage QQQ. So this bad boy is up. Yeah, and then what's the, hold on, let me look at the 65% of you guys say no, it's not going to sell off. I think I agree. Let me pull up the ticker that's the short Nvidia ETF. We'll look at that together. It's NVD. Okay, so let's look at that. NVD. And wow, dude, that's down 33%, dude. Oh my gosh. There was 4 million in volume on that. If you had NVD, which was a leveraged 2x short Nvidia ETF, I mean, it makes sense. Nvidia's up 17%. You're down 34%. Wow. We're Square. We're Square after hours. We're Square. Square is 10%. Still up 10%. The call has not started yet. Let me just make sure. Yeah, still not started yet. Okay, so we got the call in 8 minutes. So again, let me pull this up for those that missed it in the beginning. I want us to figure this out. Nvidia now 791. What do we do with this? What do you guys think? We got 18.5 on the retirement account. I'm thinking of making this a YouTube portfolio. We can look at it every day. We're going to buy and sell everything together. I'm a blank slate on this 18.5. I wanted to get it to 20, dude. If I had not sold those 140 contracts before Robinhood's earnings, if I had not been a little chicken, this thing would be at like 23 already, because like those would have gone up about 50%. But I got scared that fintech would shit the bed. But overall, we did well on the Robinhood play. All time, it's up 37%. I want to see, can we do another 35 by the end of the year and get this thing up to 25,000? But I have no idea what to do with this thing. Why is Carvana up? They're 35% sold short, so I imagine that the shorts are getting squeezed right now. I mean, they posted a profit. Maybe they didn't expect that. So earnings again in 7 minutes. We're going to be live in 7 minutes. Options on Warner Brothers Discovery tomorrow. Why? Why is Warner Brothers WBD? They're up 0.31%. I don't know about Warner Brothers. Nothing that interesting into them. Do we just YOLO the 18 grand into Nvidia? Just watch that shit go to the moon? Dude, that would be such a fun thing to do, but there's no way. Because the thing about the Roth money, and this is why I was scared before Robinhood's earnings and I sold the extra 140 calls, or else this would have been up a lot more, is because it's the Roth money. Once you put it into something and you go down a little bit, you can't, I can't add more capital to this is what I'm trying to say. I can't be like, okay, I'm down on a position. Let me add 5 grand and DCA down so I can make up for it quicker. It's like, no, you're down. You're down. You either take the L or you're holding that thing. So we got to be really be careful with what we buy here. Cause if we make a bad decision, then it sucks. We're just going to be holding that for a while or else we got to take the L. PayPal just shot up. Why did PayPal shoot up? Don't get me excited, dude. Don't make me feel like, don't do that. PayPal's not up, dude. It's up 0.41%. It's not. Is this what it's come to, dude? Is this what up means for PayPal now? Like, you know what PayPal needs to do? It needs to watch the movie Up. That's what it needs to do. And maybe if they watch the movie Up, they will realize that life is short and one day you will die. And maybe before you die, you should try to get your stock to go up so that you don't have regrets and a bucket list just filled with all these shareholders that wanted to sell this damn stock before they die at a profit, not a loss. Maybe PayPal, maybe Alex Chris needs to go to his executive team and say, hey guys, Friday night, I don't care what you're doing. You're going to come to my house, get all the C-suites, and watch up together. Okay? Maybe they like, maybe, I tried to not laugh for as long as I could. Maybe they need to watch up because this is getting a little ridiculous. This is getting a little ridiculous. This damn company, it doesn't move, dude. Every day I look at it, it does not move. It's just stuck. There's like 11 million shares traded every day. What's the volume today? 17 million. How do 17 million shares move almost every day and nothing happens? It's been at 58 since 1958. Like, it's not moving. It's just not moving. The World's Got Talent says, I have up Blu-ray right next to me. Dude, I think I watched that on the computer like 4 or 5 years ago. I'm not gonna lie, your boy started crying. I'm not gonna lie, it got me. It got me. I didn't watch it in 2009 like everybody. It got me a couple of years ago. I started crying. I was bawling like a little baby. But maybe Alex Chris needs to cry a little bit, okay? Because that's how all of us feel when we look at this damn stock that doesn't move every day. We just want to cry, and maybe he needs a little tear in his eye to realize what shareholders feel like. Maybe, just maybe. What is Blu-ray? I wonder if that's a real question or a fake question. I wonder if that's a kid asking that or if that's like someone who's older. I know what Blu-ray is. I'm not that young. I used to have a Blu-ray, but dude, that's crazy. No one uses DVDs anymore. That's wild. No one uses DVDs anymore. That's pretty crazy. DVDs are done. I used to have CDs as well. Jesse McCartney, Beautiful Soul. That was my first album ever. I'm curious if anyone's listened to that album. It's I think it's one of the best albums of all time. Jesse McCartney, Beautiful Soul, 2004. I had the CD player. That got me really into music. I love that album. If you search a blue waffle, that's what Blu-ray means. So I'm not falling for this. Okay. I'm not falling for that. Okay. I fell for that many, many years ago. We're not doing that. So I think a Blu-ray is a little bit different than blue waffle. All right. So we're not doing that. We're not doing that. Rivian fell 25% today. They're still down. Square's up about 12%. We got the call in 3 minutes. Adobe. Wow. Why is Adobe down? That's weird. Adobe's a pseudo AI play. I mean, it is an AI play in my opinion. I don't know why that's down. Nvda is basically said we're on an island by ourselves because Palantir fell off. A lot of these AI plays fell off. Let's go to the SaaS companies. SaaS right now is being a little sassy. Intuit is down. Zscaler is down after hours. Everyone's down after hours, but they were up a little bit for the day. Oracle was up 3% of the day. Snowflake was up 5% of the day, 4.35. Datadog was up 4.2%. MongoDB is up 5.26% on the day. So was Cloudflare, 4.61. They had really good earnings a couple weeks ago as well. And ServiceNow, they had good earnings. They're up 2.84% as well. Algaron271, thank you for the $5 super chat. He says, bro, I tried your miso soupy happy line on a girl and it killed. Yo, that's crazy. I'm so happy. So for those that don't know the miso happy line, I was on, wasn't even a date, dude. I was just with this girl one day, and we went to get sushi, and I guess you could call it a date. It wasn't like an official date, but it was kind of like a little date. And we were like friends. We were catching up with each other, and we kind of liked each other in the past. So we went to get sushi, and the waiter comes up and she was like, would you like miso soup? And then I looked and I was like, yeah, one for me, one for her, because she makes me so happy. And she started smiling. It was great. It was just great. It was just great. She started, it was Riz to a different level. Okay. So I'm really happy that someone used that line and it killed. That's great. It's a great line. It's a phenomenal line. It's a phenomenal line. I'm going to use it with Kelly when we go out, when she comes to New York in April and we go on a date, and she's going to roll her eyes because she's seeing me say it right now, but she's still going to laugh and she's still going to smile. That's what's going to happen, dude. When you say it in person, dude, girls can't resist that shit, dude. When you say it in person, I mean, when you really hear that line in person, it's incredible. P-Sash, thank you for the $5 super chat. What am I missing about PayPal? 99% of us prefer to use Apple, Google Play, or auto-filled credit cards. Yes, but their transactions per account is increasing. The DCF has them undervalued. The street has them growing at 0% year over year. That's probably not going to happen. So from a pure value perspective, even if the competition is there, these guys are undervalued. And they should be good. So I think that's what no one's missing about PayPal. The problem is it a value trap or is it actually a deep value play? We're going to find out in probably a few months. We'll know if that's the case. Namir says she makes me so horny. Oh my god, dude. That's a good one too. Wow, they're really playing Jay-Z in the block call. This is so cringe, dude. They're playing Jay-Z. I'm not going to play this because it'll get demonetized on YouTube. But they think they own Tidal so they can play Jay-Z before the block call. That's hilarious, dude. That's absolutely hilarious. That's incredible. Kevin Smith says, we use PayPal for peer-to-peer. I use it for anything I buy online. Apple pays for consumer purchases in person. If you use PayPal when you buy online, you have fraud from protection. That's also a big moat. I use PayPal for everything I buy online, not Apple Pay. But if I'm like at the store, I use Apple Pay. So there is a from a checkout e-commerce perspective, there is a major difference there.
Dixit, head of investor relations.
All right, call starting now for Square.
Hi, everyone. Thanks for joining our fourth quarter 2023 earnings call. We have Jack and Amrita with us today. We will begin this call with some short remarks before opening the call directly to your questions. During Q&A, we will take questions from conference call participants. We would also like to remind everyone that we will be making forward-looking statements on this call. All statements other than statements of historical fact could be deemed to be forward-looking. These forward-looking statements include discussions of our outlook and guidance, as well as our long-term targets and goals, and we may decide to shift our priorities or move away from these targets and goals at any time. These statements are subject to risks and uncertainties. Actual results could differ materially from those contemplated by our forward-looking statements. Reported results should not be considered as an indication of future performance. Please take a look at our filings with the SEC for a discussion of the factors that could cause our results to differ. Also, note that the forward-looking statements on this call are based on information available to us as of today's date. We disclaim any obligation to update any forward-looking statements except as required by law. Further, discussion during this call of Cash App's banking services refer to those offered through our bank partners. Within these remarks, we will also discuss metrics related to our investment framework, including Rule of 40. With Rule of 40, we are evaluating the sum of our gross profit growth, and adjusted operating income margins. Also, we will discuss certain non-GAAP financial measures during this call. Reconciliations to the most directly comparable GAAP financial measures are provided in the shareholder letter and our historical financial information spreadsheet on our investor relations website. These non-GAAP measures are not intended to be a substitute for our GAAP results. Finally, this call in its entirety is being audio webcast on our investor relations website. An audio replay of this call and the transcript for Jack and Amrita's opening remarks will be available on our website shortly. With that, I would like to turn it over to Jack.
Thank you all for joining us. Last quarter, I focused our shareholder letter on how we're going to grow Square through 4 priorities. This quarter, our letter is about Cash App's strategy and our goal to become one of the top providers of banking services to households in the U.S. If you haven't yet, please read that letter for details. As we did last quarter, to maximize time for your questions, we're going to focus our opening remarks on Amrita providing more details on the financials. Over to Amrita.
Thanks, Jack. There are 2 broad topics I'd like to cover. First, where we've been, in particular our performance for the full year and fourth quarter of 2023, where we saw strong growth and meaningful improvements in profitability, driving progress against our investment framework. Second, where we're headed, our expectations for 2024, our guidance for the first quarter, recent trends we've seen, and ways we'll look to drive improvements on Rule of 40. Let's start with our strong growth and efficiency in 2023 as we continue to drive toward our Rule of 40 target in 2026. We ended 2023 with $7.5 billion in gross profit for the year, up 25% year over year, or 24% on a combined company basis. Our heightened focus on efficiency helped us improve profitability during the year. Adjusted EBITDA was $1.79 billion, up 81% year over year, and 24% margin on gross profit, our highest ever. Adjusted operating income, which as a reminder includes expenses related to stock-based compensation and depreciation, was $351 million, our highest yet, representing a 5% margin on gross profit and compared to a loss of $145 million a year ago. Cash flow generation also improved this year, as adjusted free cash flow for 2023 was $515 million, up from negative $346 million a year ago. Taking the components together, We achieved Rule of 29 in 2023 on a combined company basis, which was a few points higher than our guidance as of the third quarter. The other component of our investment framework is gross profit retention, which shows our ability to retain a customer over time and is an indication of whether our products, pricing, and support are valued by our customers. During 2023, Square and Cash App each achieved positive gross profit retention in aggregate across our annual cohorts. Square cohorts saw strength in software and banking, offset softness in processing volumes during the year. Cash App benefited from growth in inflows per active, driven by financial services products and monetization from pricing changes. In the fourth quarter, gross profit was $2.03 billion, up 22% year over year. Adjusted EBITDA was $562 million, and adjusted operating income was $185 million, both higher than our guidance, driven by continued discipline in discretionary spend. On a GAAP basis, operating loss of $131 million was impacted by a goodwill impairment of $132 million, severance expenses of $70 million, primarily related to our recent organizational restructuring, and lease impairment restructuring expenses of $34 million. Also, as a reminder, starting in the fourth quarter, we restructured our commerce efforts by moving our BNPL platform fully into Cash App. We are reflecting this change in our fourth quarter and 2023 gross profit results, as well as prior periods. Let's get into the drivers for each of Square and Cash App in the fourth quarter. Square generated $828 million in gross profit, up 18% year over year. Square GPV was up 10% year over year in the fourth quarter. While we experienced positive acquisition and stable churn of existing sellers compared to prior periods, GPV per seller continued to be affected by slower discretionary spend in the US, and consistent with what we shared last quarter, we've also seen a lower gross profit contribution from ramping cohorts of sellers. Within our card not present volumes, we saw solid growth in online volumes, up 11% year over year. This was partially offset by a decline in manual keyed entry, or MKE volumes, where a seller manually enters card information into a payment device, either in person or over the phone. This has been an ongoing trend, with MKE volume now representing just 13% of Square GPV in the fourth quarter of 2023, compared to more than 16% 2 years prior. We expect the headwind from MKE transactions to remain for some time, although its impact should moderate as we expect software-enabled payments to become an increasing driver of our business. While Square GPV growth has moderated, driven by GPV per seller and MKE declines, our banking products and vertical points of sale solutions delivered strong growth, with gross profit from these products up 28% and 27% year over year, respectively. Cash App generated $1.18 billion in gross profit in the fourth quarter, an increase of 25% year over year. Looking at the components of the inflows framework, which as a reminder does not include our BNPL platform, as of December, Cash App had 56 million monthly transacting actives, up 9% year over year. Inflows per transacting active averaged $1,137 in the fourth quarter, up 8% year over year, driven by increasing adoption of our financial services products over the past year. Cash App Card continued to increase its scale and introduce customers to financial services within Cash App. Cash App Card reached 23 million monthly actives, representing more than 40% of our total actives base in December, and growing 20% compared to the prior year, more than twice as fast as overall monthly transacting actives. Monetization rate was 1.48%, up 9 basis points year over year and 5 basis points quarter over quarter. Improvement from the third quarter was driven by a number of factors, including an increase in Bitcoin gross profit from pricing changes implemented during the quarter. Turning to our BNPL platform, which contributed $242 million of gross profit to Cash App in the fourth quarter. GMV from our BNPL platform was $8.6 billion in the fourth quarter, up 25% year over year, driven by strength across our Pay in 4 offering, as well as single-use payments, which allows customers in the US, UK, and Australia to shop via the Afterpay app at merchants we don't have a direct relationship with and pay using BNPL. Losses on consumer receivables were 1% of GMV, consistent with historical ranges. As Jack included in his letter, integrating commerce payments tools is a key focus for us next year, and we see powering BNPL through Cash App Card as a significant opportunity. Turning to our guidance, we've committed to achieving our Rule of 40 target in 2026. Our primary objective in 2024 is to deliver an improvement from the Rule of 29 we achieved in 2023 on a combined company basis. To achieve this, we have put forward an initial guidance that we intend to exceed by at least 1 point of outperformance during the year, either on gross profit growth or adjusted operating income margin, or both. As we did last year, we are working to identify growth opportunities and additional efficiencies that further progress us towards Rule of 40. For the full year 2024, we are expecting at least $8.65 billion in gross profit, or at least 15% growth year over year. By ecosystem, we expect Cash App to grow faster than Square, but for growth to moderate from 2023 as we lap pricing changes and other initiatives that improved our cost structure. As we look to 2024 and beyond, we are focusing our efforts on driving engagement through product adoption and product velocity. Within Square, we expect software and integrated payments and banking to be continued drivers of growth. We believe the work we put towards our new strategic priorities and the investment behind several go-to-market initiatives can improve seller acquisition over the next few years. On profitability, we are raising our full-year guidance and now expect adjusted operating income of at least $1.15 billion compared to our preliminary guide of $875 million, and adjusted EBITDA of at least $2.63 billion versus $2.4 billion. This represents year-over-year margin expansion of approximately 9 points on adjusted operating income and 7 points on adjusted EBITDA. As we continue to focus on managing costs, we expect to achieve leverage on share-based compensation expenses as a percentage of gross profit compared to 2023. This guidance on growth and profitability is based on the visibility we have into our business today, with no significant changes to the macro environment. Lastly, our guidance for the first quarter of 2024. We expect to deliver between $2 to $2.02 billion in gross profit, or 17% growth at the midpoint. For Square, we expect gross profit and GPV to moderate slightly compared to the fourth quarter's 18% and 10% respectively. So far this year, weather has periodically impacted Square GPV in the US, and particularly in January, where we saw it drive a 3 to 4 point moderation in growth, as certain regions experience impacts to in-person volumes, particularly within food and drink and retail. For Cash App, we expect growth to be driven by actives and inflows per active in the first quarter. We expect the gross profit growth rate to moderate compared to the fourth quarter's 25%, as we'll be lapping tougher comparisons. Looking at profitability, we plan to deliver both quarter-over-quarter and year-over-year growth, with adjusted operating income of $225 to $245 million and adjusted EBITDA of $570 to $590 million. The respective midpoints represent margins of 12% and 29%, and year-over-year growth of 361% and 57%, demonstrating our continued focus on driving profitable growth. With that, I'll now turn it back to the operator to start the Q&A portion of the call.
Thank you. If you would like to ask a question, please press star followed by the number 1 on your telephone keypad. If you would like to withdraw that question, again, press star 1. And we ask that you please limit yourself to 1 question. For any additional questions, please re-queue. Your first question comes from the line of Tien-Tsin Huang from JP Morgan. Please go ahead.
Thank you. So you acted really quickly here on cost. I want to ask how quickly you can attack growth in 24. Really, product velocity is the question here. In your letter, Jack, you talk about closing product gaps in Cash App and reclaiming leadership in engineering and design at Square. How quickly can you get there, and when might we see some measurable benefits to growth in 24? Thanks.
Yeah, across the board in every one of our business units, we've been going through an exercise in order to simplify how we work so we can move much faster. And that's inclusive of Square and Cash App and Title and TBD. So you should expect a much higher product velocity across the board. With Square in particular, we've been doing a lot of platform work. This is our number one priority to ensure that we can move much faster with some features and feature gaps that have held us back from certain customers, namely with food and bev. We have, for example, pre-auth coming this year, and when those platform elements unlock, it's just going to unlock a whole bunch of speed across restaurants, retail, services, and I believe we'll be able to push really hard and see really good outcomes. On the Cash App, where we're going to benefit a lot from is the focus on the banking relationships.
Rob.
Hello. We've been focused a lot of we've been pulling the thread, I should say, on banking relationships for quite some time, and we have proven out the model with the success of the Cash App card, and it's really focused a lot of our efforts in order to, as I said in the shareholder letter, bank our base. So our strategy is to make sure that we are the best choice and the first choice for anyone looking who's making under $150,000 to see Cash App as their primary bank. And that has to do, one of the biggest signals is that the majority of their direct deposit is going into Cash App. So we're going to move very fast because we have a much more focused roadmap, and the roadmap against banking in particular. And as we said in the letter, in a lot of detail, I think we'll see very positive outcomes from that focus, and it allows us to go to parts 2 and 3 of that strategy, which is on families and also becoming a social bank. Cash App is inherently social. We have this incredible network effect through starting with peer-to-peer, and we have this opportunity to make it even more social, and really look deeply at the local payments and local commerce in particular. And that's where the intersection with Square comes into play. We're going to start putting our Square customers first and foremost in the Cash App, and you really see the power of our combined ecosystems and the combined network.
And I just add, Chintan, just to tie this together with our 2024 outlook, our guidance philosophy is to guide based on our current run rate trends in our business, what we're seeing in the business quarter to date as of earnings, and the known expense and growth levers that we've incorporated into our plan entering the year. So a lot of the refocused strategy and key growth initiatives that we're discussing are not included in our 2024 expectations, given how recent they are, and that they provide us with opportunities to outperform relative to this initial guidance, whether it's a product platform or go-to-market experimentation within the Square business, or the Cash App Bank the Base strategy. We're hard at work at each of those elements, and we expect those to deliver for us as we get into later into the year in 2025 and beyond, but still early days.
Your next question comes from the line of Timothy Chiodo from UBS. Please go ahead.
Great. Thank you for taking the question. I want to dig in a little bit to the Square distribution approach. You've talked about building out the vertical outbound sales teams and also potentially experimenting with local in-market sales teams. And also saw in the shareholder letter you mentioned the revamped referral program, but maybe you could expand upon how Square views the potential to partner with banks and ISOs. So adding bank partners for distribution, adding ISOs to get broader coverage across the nation, and the various considerations and how you sort of view the potential for that in the future. Thank you.
Yep. We're definitely open to this. We tried this in the past in our first few years as a company. As many of you know, JP Morgan Chase was one of our earliest investors, our Series B, and we had Square readers in every single branch in the United States. It wasn't that effective. I think that particular strategy just did not work because the expectation of the customer coming in, especially for business banking, for whatever reason, was off. That's not to say that all these channels don't work. Obviously, it does work for a few of our competitors, and we're certainly open to them and open to exploring them. I think the biggest thing that is really important for Square is certainly our go-to-market approach, but our product itself is where I want to put a lot of our focus. One of the things that we're doing soon is right now we have about 4 or 5 apps in the App Store. It's pretty confusing to direct people to the App Store, and when they get there, really, it's a function of Apple's search results as to whether they find us or not, the app they need, especially if they're a restaurant or retail or a services organization. So what we're going to do is we're going to go back to having one app. It's just going to be called Square, and we can easily say to anyone that you can go to Square or you can download Square. You have everything you need. The interface and navigation and features will dynamically shift based on the type of merchant you say you are, and shift over time as you get more and more sophisticated with the software. And we can also obviously help folks with our sales team to guide them through. But I think generally it'd be a whole lot simpler. We have massive success with self-serve. And as we do add referral engines and be more targeted with them, specifically within food and beverage and restaurants, having a much simpler way to get the app to use it and to get up and started, whether you're a micro merchant, just one person, sole proprietorship, or all the way up to multi-location, multi-country. So that's the goal. And we'll realize all that this year. And I think that's really going to unlock a ton of growth and make anything that we do from a distribution standpoint, whether it be through ISOs or bank partnerships, or what I think is more important, through very targeted channels for restaurants and services and retail, it's going to make it that much better. And most importantly, we'll focus on retaining, which is a big aspect. The other thing that I think will help us retain, which is a core part of our strategy, number 4, is banking. We have 9 products within the market. They're only going to get stronger. It's the thing that truly differentiates us from our peers. And we not only have an ecosystem that serves our entire business, but we have the equivalent of a business banking account. Just like there's JP Morgan Chase branches that they're going to in the past, they can get a card, they can get a credit card, they can get a line of credit, they can get a loan, as we've been doing for quite some time. And that it's integrated all into one stack with one app download is hugely unique and also hugely important to our sellers. So I think it's going to be amazing.
Thank you, Jack.
Your next question comes from the line of Darrin Peller from Wolfe Research. Please go ahead.
Hey, guys. Thank you. Just to hone in a little bit more on direct deposit, it obviously is moving to the forefront around Cash App for your strategy on it. And look, I mean, we obviously see a notable set of banking assets you've been able to package for your MAUs. But if you can just expand on what you see actually driving adoption or accelerated adoption of direct deposit now, getting that 2 million to say 5 or 10 million users versus I know there's been some prior attempts to make that happen. And then Jack, maybe just what time frame would you consider a success on this front in terms of an incremental, maybe 5 or 10% of Cash App users taking on direct deposit?
I think the biggest driver is going to be easy, connected banking features that just work and that people can trust. We want to make sure that people see Cash App as reliable, as dependable, as something that they trust their money with and their full direct deposit of their paycheck with. And trust is the one input, but a big factor of that is the output. So what can I actually do with it? And the Cash App card has been one of our most successful products within Cash App. It's extremely easy to get a card. It's extremely easy to personalize it, to use it, to change it, to give it to family members. So there's a lot that's attractive there. There are some gaps that we're missing that traditional banks offer that we do not. But really the roadmap is filling those gaps and doing so in an intuitive, well-designed way that feels fresh and benefits from technology to give time back to the customer. And then as people see that, and as people use it and they talk with their friends and their family about it, that's the growth. That's how direct deposit grows. And people, again, trust us more and more to put more of their paycheck in the Cash App because they know they can use it in very traditional ways that are reliable, but also entirely new ways, and it all fits together perfectly and seamlessly. So expectations, we want to move as fast as possible. The fact that we're no longer focusing on expanding globally for right now, that we're focusing on banking our base in the United States is going to allow us to move much faster. And I think we'll see outcomes much faster than we have traditionally. And this is the base foundation for our other two priorities, which is moving more up market with families, which we've seen some early positive signs from, and then really going after, being a social bank, starting with peer-to-peer, but expanding beyond that and really getting into neighborhoods and local communities and focusing a lot more on commerce. So all these tools add up to desire, we believe, to put more of my money with Cash App and use it there. And hopefully, more and more becomes 100%.
And Darren, just to go a little bit deeper on some of the actual features that we think will be compelling for customers, we've got a bunch of features. We're rolling out more features to give customers an experience beyond what's available in the market today. So today, we think our direct deposit offering is differentiated with no fees or minimums, early direct deposit availability, and the benefit of our active money being in the broader Cash App ecosystem where they can send, spend on Cash App Card or Cash App Pay, invest it, et cetera. We're also focused on the new products and features that drive engagement. So for example, we recently launched free overdraft coverage up to a certain amount. We introduced yield on savings balances and allowed for automatic paycheck distributions. So we're prioritizing launching products that customers expect from us before they start bringing in more of their money. Today, it's about 2 million paycheck deposit actives as of December, about 3% of our monthly actives. But this will be one of the key KPIs along with broader inflows per active that we're focused on driving forward as part of our bank the base strategy.
That's great. Thanks, guys.
Your next question comes from the line of Mike Ng from Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you very much for the question. I think your 2024 outlook implies OPEX growth of about 4%. Would you just discuss your confidence in being able to achieve that at least 15% gross profit growth against the backdrop of this tight cost management? And then, what signals are you looking for when deciding whether to invest in OPEX more aggressively again? Thank you.
I can start maybe with a reminder of kind of the key areas of operating expense leverage that we've been pursuing and which we believe still continue to have opportunity against. And that, those constraints are clarifying for us actually in supporting, further scoping, prioritization, and operational excellence in how our teams operate. But the key categories being, one, personnel. Obviously, you heard from us last quarter our constraint around people, which at the 12,000 person cap, which we're currently operating under and expect to for some time. That unlocks a tremendous amount of leverage for us, both from a non-GAAP operating expense perspective as well as leverage from an SBC perspective. And you see that reflected in our expectations for 2024. And that constraint, again, is what leads to stronger prioritization and focus in the areas that will impact our customers the most and ultimately lead to profitable growth. The other key focus area for us is around corporate overhead expenses, where we've already seen opportunity to get more efficient, whether it's things like third-party spend with vendors, real estate, T&E, data and cloud fees, professional fees, et cetera, we have an opportunity to continue to refine how we operate to make sure that we are operating with the greatest amount of discipline, constraint, and efficiency. And then as we look longer term, of course, there are new technologies like AI that we can be leveraging in-house, not only in terms of the products that we're serving our customers, but that deliver efficiency to our teams internally, whether it's customer service or sales or engineering and design. And then, of course, structural costs, which we've already made some headway on with some partner renegotiations last year, but we'll continue to pursue in terms of unit economic improvement across our base of products. So there are a number of different areas for us that we've already been digging deep into, and for us to continue to do that, that actually support our opportunity to continue to grow our platforms and grow our overall gross profit.
Great. Thank you, Amrita.
The two things I would add to that is it's just to emphasize what Amrita said about AI. I mean, you all have been hearing AI constantly in all these calls in terms of efficiency, but it's going to be extremely impactful for us as we look at everything that we're doing and all the tools that we're building, and how much more productive it makes all of our engineers, and I think in the very near future our designers as well. That allows us to learn much faster, allows us to ship faster, allows us to correct mistakes much faster, and really be ahead of the market where we think our strength is, which is creativity and bringing all these very complex systems together. And the second thing is, about 3 years ago, we were more in a mode of letting as many flowers bloom as possible. And it created a bunch of inefficiencies between all of our ecosystems. We had a lot of duplication between Square and Cash App, and these tools and these costs just weren't really weren't great at all. And we've done a ton of work to clean that up, and I believe there's even more to go. So I believe we can actually move much faster, ship much faster, because of those two things, and because we don't have such a dependence on this multitude of tools that that are all different but effectively doing the same thing or solving the same use case.
That's very helpful. Thank you, Jack. Thank you, Amrita.
Your next question comes from the line of Harshita Rawat from Bernstein. Please go ahead.
Good afternoon. I want to ask about Cash App and commerce. Cash App Pay is growing rapidly, although from a small base. Can you give us some color on the composition of these volumes, for example, within Square merchants or online? You've had some very interesting merchant acquirer partnerships to enable Cash App Pay recently as a payment option online. What are some of the most salient things you can do to kind of grow Cash App Pay penetration in e-com? And also, just related to Cash App overall, can you also talk about your compliance investments in KYC and AML as you grow banking? Thank you.
Yeah, I'll start off, Harshita, on Cash App Pay. We're really excited about the progress that we've seen over the past year and how quickly we've been able to drive growth as we've expanded to more and more merchants. This is a key part of how we integrate commerce tools more broadly into Cash App over the next several years. We see Cash App Pay as a seamless way for customers to spend, especially online, and provides more ways for our customers to spend beyond using Cash App Card. We ended December with 3 million monthly actives and $2.5 billion in annualized GPV, which has more than tripled since what we reported to you last June. Growth here has been driven through recent partnerships such as DoorDash, Adyen, Stripe. We have a strong pipeline as well of large merchants we're exploring to continue to expand our reach. Of course, Afterpay's enterprise sales team has been critical here and allowed us to scale quickly by leveraging existing relationships and the quality of their sales organization. I think the second part of your question was about Cash App Commerce, or can you repeat the other? Did we answer your question, Harshita?
Yeah. So just, the compliance investment just more broadly within Cash App, not just related to Cash App Pay, especially as we focus now more into banking.
Sorry, compliance investment more broadly across the company?
No, within Cash App, I was just kind of thinking about some recent media reports suggesting regulatory probe into Cash App.
Yeah, absolutely. So compliance is compliance, security, fraud, risk. These are all areas that are constant iterations. We're never going to build a perfect system. We can only focus on velocity and speed. And any errors that we've had in the past, our goal right now is to make sure that we correct them quickly, and that we continue to build those learnings into the future, and that we stay 10 steps ahead of any adversaries. And that's been a big focus for us for years. But we've put even more emphasis on this right now because we do want to earn more trust with the use case of banking and being that primary bank for people. And obviously, this is a big part of having that trust. We want people to trust that if they put 100% of their paycheck into Cash App's direct deposit and utilize it, that it's sound and they can do everything that they want without restriction, and that it just works. So this is a significant investment for us, and will continue to grow. But we have entirely new technologies available to us now that makes this work even more efficient, much better, and we can be far more exhaustive and far more precise in our approach than we have ever in the past.
Thank you.
Your next question comes from the line of Trevor Williams from Jefferies. Please go ahead.
Great. Thanks for taking the question. I want to follow up on the product pipeline in Cash App, especially around commerce and the new products you expect to layer in this year. In the letter, Cash App Card was mentioned as a way to distribute BNPL, which I think that's something we haven't heard from you guys before. If you could dig into that, and then just how much contribution, at least within what you're expecting for Cash App, that you're baking in from some of these newer initiatives around commerce within the full year outlook. Thanks.
Yeah, I mean, so we've been doing a bunch of work since we first acquired Afterpay. As you all know, we had more or less split the org between Square and Cash App. We realized last year that was incorrect, and that we should put the majority of it within Cash App because that's where the greatest benefit is going to be. And that's first and foremost in discovery in Cash App, and discovery of commerce, whether that be global internet commerce, e-commerce, or more local commerce, such as Square merchants. But we have an incredible asset in Afterpay, and we have an incredible asset in the Cash App Card and that distribution. So we're looking for all the tools, all the financial tools that Afterpay has created will be right within Cash App and right within the card. And as I talked about on past calls, you can imagine, just as you would on the Cash Card today in the app, you can turn on Boost and get offers and see these things in real time and interchange them. We want that same sort of feeling for buy now, pay later on the card itself. And this opens the door for our customers to treat every single merchant that they go to as a buy now, pay later entity, which is pretty awesome and pretty cool, and we're excited about it. So there's a lot there with the financial tools within Cash App, and also within the Afterpay app itself within Australia. We have a lot of opportunity to continue to grow and to push. But this will be a year of much tighter integration and much more visibility of the Afterpay tools and the use cases within Cash App itself.
And in terms of how we think about our outlook with respect to some of these newer products that we'll be launching later this year and into next year, as I said earlier, our guide is based primarily on our current run rate trends in the business and known elements around expenses and growth levers. And typically, we're moving quickly to improve our product velocity, but typically as we launch these products, they take time to ramp. So I'd expect to see greater benefit later in the year, but primarily heading into 2025 and beyond as we move quickly against these commerce and banking and financial services products within Cash App.
Your next question comes from the line of Brian Bergen from TD Cowen. Please go ahead.
Great. Thanks so much for taking the question. Do your broader banking aspirations require you to do anything different on the banking license side? Or asked differently, should your efforts on the banking side be successful, can you still leverage partner banks, or do you need to go with direct licenses? Thanks.
Yeah, great question. It doesn't necessarily require us to do anything differently. We do have Square Financial Services, our bank, and we're very excited about the expanded potential use cases that we can utilize for in addition to the ones today, which are around loans. So we want to make sure that the bank itself can help us provide more efficiency and provide speed, much tighter integration, so that we can have much more cohesive experiences. And it doesn't limit us from using partner banks. You can think of these as a portfolio. We can use multiple banks, including our own, to do various things in the future. And we have a lot more flexibility as that comes more online. And what's fully going to roll all this is the product experience that we can offer to people, and obviously that we can do it with new technology that makes it easier and much more profitable than a traditional bank could. So that is our focus, and we don't see any significant changes in how we build products coming up.
Great. Thanks very much.
Your next question comes from the line of Ken Suchoski from Autonomous Research. Please go ahead.
Hi, good afternoon. Thanks for taking the question. I think you mentioned in the quarterly letter that the 2022 and 2023 Square cohorts are tracking to a 6 to 7 quarterly payback period. How are you guys thinking about the payback period for 2024 and 2025? And if you can comment on how you're thinking about marketing spend in Square for the year, that'd be great. Thanks so much.
Sure. Happy to kick off on what we've seen recently and what we expect moving forward. As we orient primarily to ROI, the returns that we see over a 4-year period in how we go to market across the Square ecosystem. And as we're able to attach more products to our customers, as they're able to grow on our platform, that extends the lifetime value of these customers and ultimately what we're able to invest into go-to-market initiatives to bring customers into the Square ecosystem. So I would orient you more to ROIs, where we've seen healthy ROIs at sort of 3x over 4 years in the past, and we'll continue to focus on ROI moving forward. Across our initiatives, I think the key focus for us is the pace of experimentation across both sales and marketing. We're going to orient more of our spend in marketing to proven channels, but we'll have a number of our efforts from a team perspective on trying new things in small ways so that we can iterate rapidly and learn, whether that's in sales, where we've now deployed contracts, or where we're taking a local approach with referrals, or we're bundling our products differently, as we did with the Restaurant Essentials bundle, to create simple pricing, one simple price for a set of customers across the restaurants vertical. We are doing a number of different things to drive, cohesion in how a customer can onboard into the Square ecosystem. And as Jack mentioned earlier, some of the product initiatives around our single app strategy and our platform initiatives are key unlocks for us as we think about more efficient onboarding of customers into the broader ecosystem.
The only thing I'd add there is as I said in the letter, we're doing a reorg with Square back to a functional organization, and one of the results of that is to bring product and marketing much closer together. This is how we started the company, and we believe that the gaps that we had in the recent past really hurt our aspirations and our execution. And the reason why is we want to make sure that there's a very, very smooth ramp from any marketing that we do, and that it be targeted or more out of home, and the actual sign up flow and the customer experience they get when they come to the website or when they get a number to call one of our sales folks. So the organizational structure, I think, will help illuminate a lot of the issues we've had in the past, and we're focused on really making sure that they work together a whole lot better so we can move much faster.
Great. Thanks, Jack. Thanks, Amrita.
Your next question comes from the line of Brian Keane from Deutsche Bank. Please go ahead.
Hi, guys. Wanted to ask about the Cash App monetization rate. I think it was up 5 basis points sequentially. If I recall correctly, I think you thought it would be more stable sequentially. So I guess what kind of surprised and drove the outperformance in the monetization rate? I think you called out Bitcoin and pricing. So just curious exactly on the pricing side where that's coming from. And then any color on how monetization rate will trend as we go through 2024. Thanks.
Sure. So what we saw in the fourth quarter was a 9 basis point improvement year over year and 5 basis point quarter over quarter. To your question specifically on quarter over quarter, there are a couple different factors at play, but the primary ones were around Bitcoin. And within Bitcoin, it was both the pricing of the product as well as the price appreciation of Bitcoin itself, which benefited monetization rate on a sequential basis. As we look forward, we see opportunities in 2024 around actives and inflows per active as the primary drivers of growth for Cash App in 2024. As we look longer term, we see opportunities around monetization rate as we go deeper in the financial services ecosystem and we attach more of these products to our customer base. As our customers take on more and more products themselves, we see an opportunity to grow monetization rate. But as we'll be lapping some of these pricing changes coming up in 2024, we don't expect meaningful change in monetization rate, and certainly not at the meaningful level that we saw during 2023.
Thank you.
Your next question comes from the line of Pete Christiansen from Citi. Please go ahead.
Thank you. Good evening. Thanks for the question. I'm curious, could you walk us through the mechanics on the yield, the savings product for direct deposit users and Cash App? And Amrita, I'm curious your thesis on, I guess, the relative unit economics for that particular product and how you see that evolving. Thank you.
Yeah, the overall strategy is that as customers, save more of their funds with us, they make us more of their primary banking partner, and then we can offer them more financial services, some of which we monetize. We have had a history of thinking about our ecosystem in terms of the entirety of the value we provide, with some products being free, like our tax product, our investing product, our peer-to-peer product, when you use a debit card, and some products being monetized. And with the savings launch, where we're offering a yield for customers who direct deposit with us, a strong yield for customers who direct deposit with us at 4.5%, and a more modest yield for customers who use Cash App Card at about 1.5%, what we're providing is an incentive for customers to bring more inflows into Cash App. And we see a strong correlation with inflows into Cash App, driving gross profit and customers being more engaged with the broader set of products across Cash App. What we've seen so far, look, it's early days of these savings balances. We have balances from Cash App savings accounts totaled $200 million as of the end of the fourth quarter, representing 6% of overall customer funds. But as we've introduced more recently the yield, we'll be looking to more opportunities to attract savings and inflows and ultimately engagement with a broader suite of financial services.
Great. Thank you.
Your next question comes from the line of Jason Kupferberg from Bank of America. Please go ahead.
Thank you. I was just looking at page 18 of the shareholder letter showing the Cash App gross profit mix. I think at least some of that is a new disclosure, which we appreciate. It shows you become a lot less dependent on instant deposit, financial services, becoming a much bigger part of the pie. I think it was 38% in 2023. So I'm just wondering, as you execute on the bank to base strategy, is there any kind of target in mind in terms of the percent of Cash App gross profit that may come from financial services, say by 2026, as you pursue the Rule of 40 that year? And just separately, Amrita, real quick, any comments on free cash flow for 2024? Thank you.
Sure. Look, financial services at 38% in 2023 as a percent of Cash App gross profit versus 29%, 2 years prior, is obviously a key growth factor for us within Cash App, as you note in our new disclosure in the shareholder letter. And it's one that we're going to continue to focus on as we grow out the broader, set of products, as you've been hearing today and as you saw in Jack's note in the shareholder letter. So that is one that I would continue to focus on. We still have seen growth in instant deposit and other parts of the ecosystem, but just not as fast as some of the financial services products. So we'll continue to lean in there. With respect to free cash flow, I'd orient you to the trend lines across EBITDA. Obviously, the free cash flow metric is a different calculation, but it's directionally, where we expect to grow our profitability on an EBITDA basis. We also would expect to grow our free cash flow over time.
Thanks.
Your next question comes from the line of James Faucette from Morgan Stanley. Please go ahead.
Thank you very much. Just wanted to ask a question on the seller business. Looks like the growth rate in the U.S. decelerated a little bit, but international continues to look quite good. And just wondering how we should think about the trajectory of U.S. versus international, anticipate the mix, and any sense as to in what time frame, particularly the U.S. could be bottoming and where you think you can get that growth rate back to, especially as you focus on product, et cetera, as Jack's talked about. Thanks.
Yeah, it's a big U.S. growth is a big focus for us, and a lot of our focus right now is going to be on restaurants, food and beverage. And as I said earlier, I think there are significant product gaps that we have line of sight into that will be unlocked this year, that we can move much faster on from a development and product standpoint, that we'll see results from and much greater outcomes. And we'll continue to push around the world, of course, but I really want to make sure that we advance even faster than we have in the past on the U.S. And I think that's really a function of all the changes that we're making with the org, with how the product is packaged, and how we think about onboarding in particular, and making it super easy for people, and then putting a much stronger go-to-market on top of that.
Yeah, and I just add that, in addition to our focus areas in the U.S., we can benefit from those product initiatives in international markets as well. And we're enthusiastic about what we see in the markets outside the U.S. We think we're less than 1% penetrated in those markets that we're currently in outside the U.S. with a long runway for growth. And we saw GPV growth in the fourth quarter in the markets outside the U.S. grow 26% year over year, with gross profit growth about 28% year over year, now representing 13% of Square's gross profit. And obviously that's grown over time. So we have opportunities to continue to refine and push our product velocity in the U.S. And ultimately that will help with the significant TAM opportunity that we see outside the U.S. as well.
We will now take our last question from Andrew Bosch from Wells Fargo Securities. Please go ahead.
Hey guys, thanks for squeezing me in. Just wanted to revisit the direct deposit assumptions that you're kind of making. I mean, it's nice to see that the 6x data point for those who are depositing 2,000 plus. But can you give us a sense on what the path to increasing that paycheck direct deposit mix ultimately looks like in 2024 and 2025? Are there certain unlocks you kind of need to achieve to see that ramp?
I think the biggest unlocks are going to be product, and we want to make sure that it's super easy to get in the Cash App and to see what you can do with it from a banking relationship standpoint. Like I want to put my money into something that I trust first and foremost, and that has significant utility, and that the utility is broad but also highly connected and works very fluidly, and that's what we want Cash App to be. We have a lot of the pieces there. We're going to spend this year really focused on making sure they sing and they really work in a way that makes people feel great. In the same way that, like, designing a Cash App card feels. We want that across the board for every single one of our features. And it really starts, as I said before, with trust. We need to make sure that Cash App is seen as reliable, as dependable, and with a great customer base on top of it. And this is a constant iteration to make sure that we earn that trust. But then it really comes back to, like, now that I have the inputs set, like, what are the outputs and what can I do with my money on Cash App that certainly I would be able to do in a traditional bank, but what's the plus? What can I do more of within Cash App than I could do on another traditional bank? It really starts, I mean, as you know, with peer-to-peer and the fact that it's an app and it just works and it's fast and easy and meets my expectations and hopefully in many cases exceeds them. But there's a lot of work to get that right and a lot of connections we can make to do that. And a lot of it comes back down to just new functionality on top of what we already have.
And Andrew, I'd point you to Cash App Card as well as a key proof point for us as we bring more awareness to our financial services capabilities and ultimately to direct deposit. In the same way that peer-to-peer is the awareness driver for overall Cash App, we see Cash App Card as the awareness driver for our financial services and banking products and direct deposit. What we've seen with Cash App Card, now at 23 million monthly actives, growing twice as fast as our overall monthly actives base, at over 40% attach, is that we're at true scale in terms of the ability to drive awareness here. We surpassed $1 billion in gross profit in 2023 for Cash App Card, and that growth was 3 times higher than instant deposit, where customers are sending their funds outside of Cash App. So we're giving people more reasons to keep their funds within Cash App. And what we've seen in terms of the behaviors and the engagement on Cash App Card has been healthy, not only with a growth in actives, but also growth in spend per active, which means that we saw meaningful growth in overall spend on Cash App Card in 2023. And finally, point you to that strong engagement where customers using our banking products are ultimately more engaged, with Cash App Card monthly actives bringing in over 2 times more inflows, 2.3 times more inflows, and those direct deposit monthly actives bringing in 7 times more inflows than a peer-to-peer active. So there's a key, kernel here that's working with Cash App Card that we can then bring people into the deeper suite of financial services and ultimately to direct deposit.
Absolutely. Makes sense. Thank you.
Ladies and gentlemen, thank you for participating in today's program. This does conclude the program. You may all disconnect.
Okay, there you go. That was Square's call. Look, that was a pretty good call. Stock is up right now. In terms of the call itself, I think they killed it. I think they explained everything they needed to explain. Obviously, when you got really good numbers, it's easy for a call to go well. 12.64%. I think the real big thing I took away from this call as someone who doesn't understand Square's business as intimately as other people is that they're truly trying to build a consolidated financial ecosystem that is modern, that obviously involves deposit growth, has Bitcoin exposure and crypto sort of intricacies intertwined into the actual products. And then from their point of service, like sort of core product offering, right? The actual thing that merchants are able to use to do gross merchandise volumes, which is up nicely year over year. Like that, they're trying to consolidate to be even stronger and more efficient. So Jack talked a lot. Stock right now is up 12.76% about how they can make that service better in terms of things like making sure it's able to be found on the App Store, making sure they don't separate the variety of different services they offer to merchants in like 17 different products. He has 5 different apps on the App Store, but consolidating it all into one app. And then ultimately allowing the word of mouth from that to lead to further direct deposit growth. Then people that use that merchant service can either pay with Cash App, they discover what Cash App is, they deposit more into Cash App. That is really what I think the analysts were asking about as well, is like, how do you continue that deposit growth to happen more and more? And it seems like they had pretty good answers. It seems like they had a lot of answers. Honest Chill says, yes, Amit, it's about connecting Square and Cash App. That's the bull case. Now, I still don't know why they have 1.2 billion of stock-based compensation. I got to go deeper into their numbers. But the numbers, at least for the street, were not, concerning enough for them to be scared about what's happening. EPS was a slight miss. Revenue beat by 1.1%. Real revenue besides Bitcoin was up 1.9% quarter to quarter, 15.2% year over year. And then GPV was down about 4.3%, but 8.1% up year over year. Now, their guidance was also good. They guided for a couple $100 million more in gross profits than the street expected. I think the street was expecting 1.98 billion in gross profits. They gave 2 billion, something like that. That's the ballpark of what those numbers look like. And that got the market also very, very excited in order to say, all right, if you're going to grow those gross profits and we're going to allow you the ability to get capital to continue to do what you got to do at the end of the day if you're a growth company. Philip says, do you need Palantir level software devs to build this? I don't know if you need Palantir level software developers to build this. You definitely need very smart people. I don't know if you need double the amount of Palantir stock-based compensation to build this stuff. At the end of the day, it's finance. But nonetheless, maybe that is a reasoning, maybe that is some solid logic for at least justifying stock-based comp. The other thing about Square that I thought was really interesting during the call is Jack Dorsey didn't really sound that excited, but he did have good answers, which was different from Alex Chris from PayPal. Alex Chris from PayPal, not only did he have shitty answers because he doesn't really understand the business. It was very obvious he doesn't understand the business, but he didn't sound inspiring. And Dorsey, I mean, I've listened to Dorsey's lectures before. He's done many talks about startups. PayPal right now up 1% in the after hours. And this is kind of how he normally talks. He's not really like super enthusiastic. He's just kind of monotone. But at least when people asked him some harder questions about deposit growth, about making merchants feel more sophisticated using your platform and how they can consolidate different avenues in which they can grow merchant volumes, he had answers. He had arguments, and he showed what the path was and progress was for growth, whereas PayPal just did not do that. He really did not do that. Ian says he never sounds excited. Dude is dull, but he's smart. Yeah, he's incredibly smart. He's definitely more dull when he speaks, but Alex Chris didn't have anything there. Philip says in the chat, Cash App monetization rate was 1.48% of 9 basis points year over year and 5 basis points quarter over quarter. Overall inflows for the full year were 248 billion, up 22% year over year. That is one thing that's very important to understand about Cash App. I used the product yesterday. I don't use it every single day, but people are not sending people money on Venmo versus the way they're sending on Cash App. Cash App, at the end of the day, it's a very simplistic argument, but it's sexy. Like, it feels cool. It's super, like, even when you press send and like, the animations you see, this is stuff that the young generations like, and Venmo and PayPal don't really have that. And so PayPal definitely doesn't have that. Venmo kind of has that. And from that perspective, that also makes Square a lot more attractive to the end user. In 2023, we repurchased 2.5 million shares of our Class A common stock for an aggregate amount of 157 million. They have $843 million left they can do in share repurchases, and they bought back 157 million last quarter, which is also not bad at the end of the day. Now, if we look at Square's chart over the past, let's just do max. They are down significantly from the 2021 bubble at 289. Okay, so that's when they cracked, that's when they hit a top. The last time they were at these levels, at the $70 level, was June 2020. Then they rode all the way up to 289. And now you see them coming down. They bottomed at around $40 back in October 2023. Square is a fintech, but it's a fintech with crypto exposure. It's not Affirm, and it's not PayPal. And same thing with Robinhood. Robinhood and Square, Robinhood up about 0.14% after hours. Robinhood and Square are fintechs that are fundamentally differentiated from a PayPal and an Affirm in terms of how the market perceives them, in terms of just how user-friendly their products are, and how engaging they are. And that's why I think these two companies did well after earnings, whereas PayPal and Affirm kind of shit the bed. And it brings into question this idea that if we're hitting a top in the markets, where do fintechs end up going? Because right now the consumer is really resilient. If we saw the unemployment data today, 12,000 people since last week, less than 12,000 people, or 12,000 people less than last week, did not need to file for unemployment. That means more and more people are just not filing for unemployment. It was supposed to be 218. It came in at like 206. More people are finding a job. So people have money. People need to deposit that money. Where is that money going to go? Is it going to go to Cash App? Is it going to go to Bank of America? Is it going to go to Robinhood? Is it going to go to SoFi? Is it going to go into Affirm? Like, that money's got to go somewhere. Everyone's fighting for deposits. These high interest rates are what a lot of these companies are using to lure consumers into their ecosystems. But once those interest rates come down, which might not happen for the next 6 months, and maybe inflation's really good and the market doesn't come down for the next couple months, then boom, you've got an appetite, at least I think, from the broader equity markets to say, hey, maybe fintech isn't dead. Maybe there's a narrative here, even though they're not semis or AI, especially if their products are really meaningful. So I think that it's going to be exciting over the next few weeks to see what happens. If we're hitting a top on the market, then all these stocks are going to take a tumble. If we're not hitting a top, Nvidia right now, 791 after hours, then these fintechs are going to keep going. They're not stopping. Especially given the numbers that they put up this quarter. 795. Wow. Nvidia's up 1.32%. Additionally, after hours, it's up 18% for the day. It has officially added about $285 billion of market capitalization in one day. Palantir's down about 0.5% after hours. SMCI is, where is SMCI? Down about 1.74%. So SMCI was up 32%, down 1.74%. Nvidia continuing to try to get 800 after hours. It's pretty incredible, man. Pretty incredible. Chris says, why do you think we are hitting a top? It's not that I think we're hitting a top. I started to raise cash in case we're hitting a top. Look, the real reason for this is that the S&P 500 has gone up in a straight line since November, even though we've had very unique macroeconomic conditions. What are those conditions? Well, inflation hasn't come down as aggressively as the Fed has wanted it's come down. Rate cuts are probably not going to happen for the next 6 months. The S&P is above all the analyst target expectations that they thought the S&P would be at right now. All the analysts, I mean, across the board, right? And I know analysts are whatever, but across the board, every analyst at 510 or 520 end of year, we're at 507. At some point, it kind of feels like things are coming up too quick. Nvidia's up 60% year to date. SMCI is up almost 300% year to date. You got Lunar that's up 350% year to date. Like, you've got a lot of these pockets of SoundHound up 100% because Jensen Huang touched them. Like, there's a lot of different things going on that makes you feel this stuff doesn't happen unless we're in a little bit of a toppy era. And now here's another reason why the market's a little frothy. Let me you guys will get a kick out of this. Let me pick on myself a little bit. I have made $14,000 in the first 2 months of the stock market being open in 2024. I'm not that smart. Okay. I'm hopefully getting there, but I've got many years yet left until I can really say I think I know something about the markets. It should not be this easy for me to make 14 grand in 2 months, dude. Now, granted, I bought these options in November, December, right? So that's why they were cheap enough to buy during that time. But like, if someone like me can make 14 grand in 2 months, dude, on options, I mean, like, there's got to be something going on where it's becoming easier to make money. And that reminds me of 2020, 2021. So it's not that I think the market's hitting a top. It's that I think inflation really hasn't come down aggressively. Interest rates are not coming down for a while. Big tech earnings were good, not incredible. I mean, some individual instances like Meta blew it out of the park. Amazon didn't really blow it out of the park. Amazon did a good job, but Meta blew it out of the park. And then Nvidia blew it out of the park. Nvidia, Microsoft, Google were decent. You know, AMD was horrible. AMD's up 10% on the day because their guidance was AMD. AMD's guidance was disgusting. They're up more on Nvidia going up than AMD's earnings themselves. I mean, think about that for a second. AMD's earnings, they reported negative gaming growth, negative data center growth, negative XYZ, whatever metric growth, quarter over quarter going into Q1 2024, 6.1 billion to 5.4 billion. They were up like 2% after the earnings. Why are they up 10.69% when Nvidia goes up? There's not really a correlation there. Yes, they're all in the semis, ETF, in the space, and like they all operate together, but AMD mainly makes CPUs. Nvidia does GPUs. There is a unique competitive advantage, and AMD is not growing anywhere near the level that Nvidia is growing at. Why is it up? That makes me just feel there is just algorithms and people chasing. And when that happens, things don't go up forever. Things do not go up forever. And And if that's the case, it just feels like it's getting a little aggressive. Now, that doesn't mean sell all your stocks, right? Like you can't time it like that, but it does mean that if there is a little bit of a dip coming, raising cash, I don't think is the worst thing in the world. And quite frankly, in 2023, I never raised cash. I just always kept looking at the gains on paper. And that wasn't a good idea because I, could have had at least $45,000. At one point, TFC was up 30 grand on the options and SoFi was up 30. That would have been 60 grand in just like in like a couple months that I would have made in 2023 if I had sold, but I didn't sell because I didn't sell. And so trying to learn a little bit from those lessons, especially when it feels like things are getting to a top. One thing that's important to understand when the green is going is that no one feels like the green's ever going to stop, including myself. And then the green. I mean, think about what happened yesterday. Palantir was at 22.30. Market was down 5% on the assumption that Nvda might not have a good earnings. They had a great earnings. It picked up the entire market. But at what point does the market be like, okay, so do we just keep going up and up and up? Do we just keep all these prices stable? Even are we going to ignore some of the stuff that's going on? Are we going to ignore the fact that people can find a job, which might give us a risk to inflation? Are we going to ignore the fact that housing, we're on a 3-year low on supply of housing, which means when people want to buy houses, those mortgage rates are going to come up. Demand's going to go up, which means inflation is going to go up on shelter, which is 50% of the inflation on CPI. Like, do we ignore these things or do we just say AI solves everything? And I don't know. I don't know if AI is going to solve everything. So far it is. And I'm happy for that because I own Palantir, right? So like, that's great for me. Palantir being at the $24 range is mainly because the market sentiment towards AI is great. But I just don't know if you bet the farm on that and imagine that doesn't stop. Nvidia right now, $795. It's trying to hit 800 after hours. And again, same thing with fintech here. Affirm, Block, Square, PayPal, all these companies. I mean, interest rates are high, which is why they're able to sort of attract these users. What happens when the consumer isn't as resilient anymore? Do these companies collapse? Or does Bitcoin go to the moon and carry a lot of these companies? And then when Bitcoin collapses, then we get the collapse. Like, this is a very interesting market. Reddit, for goodness sakes, is trying to go public. I mean, when Reddit's trying to go public, that's how you know there is liquidity out there. There is exit liquidity. The VCs that have pumped up Reddit for almost 15 years now, they want to get out and they're willing to sell it to some schmuck. I don't mean that in a negative way. I just mean there's some schmuck out there that's willing to buy a venture capitalist shares that they bought at $1 in 2010 that they're probably going to be selling for $20, right? And they're going to get out of it. And who's going to be able to be that exit liquidity for the broader market? I don't know. I really don't know, but it does feel like there's getting to be a little bit too much froth in the broader system. Where's Nubank? Let's see some of the other earnings that we had. Nubank is down 2%. Oh wow, Nubank recovered. It was down 10%. It's down 2%. Mercado Libre did not recover. They're down 9%. Carvana is up 20%, so they still there. I think they're sold short a lot, so they might be squeezing a little bit. Rocket Company's up 6.83%, and Intuit down 1.81%. Nvidia is the main one, down up 1.2% after hours. Addy says AI has nothing to do with interest rates. The Fed or the macro in the long run, as costs go up, down, and productivity goes up, nothing will stop it, in my opinion. Well, so here's the thing. I agree with you. I agree. As AI continues to increase productivity, which should increase earnings growth, which is why the market's up. Here's another reason why the market's up. I don't think I said this throughout the whole day, but if the market perceives NVIDIA demand for AI continuing to grow, that means overall demand for the market on AI is going to keep growing. And then what is the byproduct of AI in the enterprise? It starts with one word, P, productivity. Productivity leads to increased margins. Increased margins leads to top-line revenue growth. Top-line revenue growth leads to better earnings. Better earnings leads to companies getting their stocks to go up. So, I mean, from that perspective, it's like, well, I didn't even put that logical syllogism together today. I mean, I literally, I think I didn't put it together until like just now. I think that's why the entire market, I was like, why is Shopify up? Why is Elf up today? Well, the reason they're up is if AI is increasing productivity gains for the broader market, then that's going to increase revenue. And if that increases revenue, then boom, there you go. Every company will benefit. I mean, that is a way, I guess, for this to kind of play out. So, I mean, look, that's why I think the market's up. And maybe if that is the logic for the market to continue going up, then the market's going to continue going up. I just kind of feel like I'd rather be safe than sorry. And I'd rather not, just let everything ride on that assumption versus, people waking up on Monday and being like, holy shit, I have Nvidia shares at $100. It's at 800. maybe I should take some profits. And if that does happen, we're going to see some sell side pressure. So we'll see. We'll see what everything happens. But I think this is a bull market. I think you got to be in the market. I think you got to be, in it for the biscuit. This is a market that you got to risk it for the biscuit, whatever that metaphor is. You got to be in this market in some capacity. The question is, how deep are you into this market? And I think being 20% on the sidelines is not horrible. Now, being 100% in money market funds is very horrible, in my opinion, unless we have some epic crash coming, which I don't think that's the case. I think we have a pullback, but not an epic crash coming. Then it won't be the craziest thing in the world. By the way, guys, we just got money market updates today. Okay, so we'll end on this. I usually do this on the market open, but since everybody's here and you guys are still here at the end of the call, we'll do this today. And then if you guys are on the market open, you'll hear me say it again tomorrow. What do you think? You think money markets went up or down? I just got the update. Money markets went up or down. What do you think? Last week it went down 4 billion. What do you think? Increase or decrease? Increase or decrease? Shem Pasta says up. Chris Flores says up. Down, B. Morton. Down. All right, here you go. Money markets, that $6 trillion on the sidelines, went down. Decreased by 5.3 billion. Now, look, that's a small amount of money. Last week was 4 billion. That's also a small amount of money in the broader scheme of things. But I feel like that 9 billion that left over the past 2 weeks, they're like, you know what? We can't have Nvidia go to the moon and we're collecting 5.5% on the sidelines. That might be one of the reasons why it's going down. It might be one. It's a small amount, but there might be some people calling up their fund managers and being like, get me the hell out of these money market funds and get me into some SMCI or Nvidia. I mean, that might be the general sort of tone. We'll have to see a lot more weeks of data for this to actually be substantial, but that might be something that is happening. All right. Thank you, everybody. I appreciate you all for being here. Square, phenomenal earnings. Shout out to shareholders. If you own this stock, you're up 12%. It's amazing. Nvidia right now after hours, $7.95. They've got about an hour left. We'll see if they can get to 800. Please, please, please make sure to follow me on Twitter. I tweet throughout the entire day. I'll have updates in the night on everything that's going on in the markets. I was up at 4 a.m. yesterday tweeting about Nvidia. So if you do not follow me on Twitter, Twitter's in the chat right now. Please make sure to follow on Twitter. And I will see you guys tomorrow, 8:45 a.m. on the market open. Have a good night, everybody. Thank you all for being here. From the bottom of my heart, it means the world to me. This is the world's best job. It's the most fun thing to do. And I love listening to earnings calls with everybody and analyzing the markets. Thank you, everybody. I will see you guys tomorrow morning. Good night.